Hello friends, very good morning everyone. So we have completed 3 lectures, and in these 3 days we were discussing about introduction to GST, taxable event under GST, section 7, meaning of supply, and section 8, composite and mixed supply, and these 2 completed. We started with section 9. In that 9 subsection 3, there are few notified services which are covered under RCM. In that already we have discussed, yes, that is security lending, I for import of services, R for renting of motor vehicles, and C for copyright services, G for GTA services. So that aspect we have completed. And yesterday I took RTP session, RTP November 20 session, and I think many of you have not attended. So that video will be uploaded in our channel itself immediately after completion of this batch. Maybe once you get the knowledge of the subject, then if you see that RTP, you will also be learning about that many things, okay. So therefore that RTP discussion, even if you are not seeing now, it's okay, you can see it later, that is after completion of this batch, okay. Then now continue with respect to the discussion further, that is, what is it we have? G, another G, government services. So now we need to discuss that. So sir, CG that we discussed, now got salads that we need to discuss. G for government services. See, this government services is a very big one. So we are now discussing that government services which is in the exemption and how it is connected with RCM. So now please take page number 103. Take page number 103. Page number 103 and have a look into that. That is services provided by government. Services provided by government. So we have services provided by government. Already we have discussed few points related to that. What is that? There are 4 activities of the government which is covered under supply, and all other activities are excluded from supply. What are the 4 activities which are covered under supply? Department of Post, transportation of goods or passengers, and then airport or port services, services to business entities. These 4 are covered under supply. All other activities are excluded from supply. To add to this, services provided to business entity by way of granting liquor license. So granting liquor license is also excluded from supply. Please make this connection. Please make this connection. Services provided to business entity, in that grant of liquor license. Grant of liquor license. Grant of liquor license is there, na? So that point, grant of liquor license, that is excluded from supply, okay. Grant of liquor license is excluded from supply. So which is services to business entity. So please connect that point, okay. So 4 activities are covered under supply and all other activities are excluded from supply. Now whatever the activities which are covered under supply, in that again we have few exemptions and few taxabilities, okay. So I am starting with Department of Post. In the Department of Post, speed post, express parcel post, life insurance and agency service provided to a person other than government is covered under taxability, whereas all other activities of Department of Post is exempted. What are the 4 activities which are taxable? Speed post, express parcel post, life insurance and agency services. What is agency service means? Postal department is acting as a agent in collecting bills. So today they will be collecting this telephone bills, then gas connection bills, and even electricity bills. Lot of bills they will be collecting, for which they will be charging some commission, 10 rupees, 20 rupees, like that they will be charging commission. Even lot of exam application forms they will be giving, and they will be charging some 10-20 rupees. So that will be coming under agency services. So 4 activities of the Department of Post. Sir, why they have taxed this Department of Post? For one reason, there is a private sector also in this place. That's the reason why they have taxed. That is the logic, okay? For remembering that, I told you. So because in courier agency is taxable, so why not this speed post and express parcel post? And then any private life insurance company is taxable, then why not Department of Post? Same way, any agency service is taxable, so why not Department of Post? That's the reason why they have taxed these 4. And what are the other activities of the Department of Post? Basic mail services like postcard, inland letter, saving scheme, registered post, like that, book post. So lot of services they provide, all those are exempted. So Department of Post divide into 2, that is speed post, express parcel post, life insurance and agency services. That will be taxable. That too, when it will be taxable? If it is provided to a person other than government. If it is provided to individuals also taxable? Yes sir. If it is provided to individuals also, it will be taxable. Not for business entity. If it is provided to individuals also, it will be taxable. Then all others are exempted. Then next, whether any RCM here? No RCM here. It is always FCM. There is no RCM in case of Department of Post. Then transportation of goods and passengers. We don't have any separate provisions for government engaged in transportation of goods or passengers. We have generic information about transportation of goods or passengers. Few cases it is taxable, few cases it is exempted. Even if government is also engaged into transportation, the same treatment will be applicable. So we will be discussing later transportation of goods and transportation of services, okay? And that transportation of goods and service is in general, which is even applicable when government is engaged in transportation. So that same concept will be applicable for government services when they are into transportation. For example, transportation of passengers by AC contract carriage is taxable. So even if it is a government owned contract carriage or a private contract carriage, the position will be same. There is no difference like that, okay? Then services to an aircraft or vessel inside or outside the precincts of an airport or port, means airport or port services. Airports are under the control of government, port is also under the control of government, and they will be allowing the airline operators to use the airport and the shipping companies to use the port, for which they will be collecting money from the airline operators or aircraft operators and the shipping companies. So this money collected by the government is taxable and it is under FCM, forward charge mechanism. Whereas the next one, services provided to business entity. So in that already we have seen grant of liquor license is excluded from supply by whom? By state government. By state government. Now listen, sir, what if one person has got the liquor license and that person is selling the liquor license to another person for which he got some consideration? Whether it will be excluded from supply or not, that is not excluded from supply. Only when government is granting liquor license to the business entity, the government will get some money, that is only excluded from supply. Now that person who has got the liquor license may transfer that license to another person for which he gets some consideration. So that transfer of liquor license will not be excluded from supply, that is covered under supply and chargeable to GST. Okay, so grant of liquor license, that is the point related to that, by state government. Then services to business entities, we have specific activities exempted, then thereafter other activities. In that other activities again general exemptions, and in remaining cases it will be taxable. So services provided by government to business entity, we have some specific exemptions. Specific exemptions means these services are exempted irrespective of the amount involved, and thereafter we have some general exemptions. So if it is not covered, neither covered under specific exemption nor covered under general exemption, then it will be taxable. So now we are discussing what are those specific exemptions. So have a look into this. These are the specific exemptions. Specified activities which are exempted. Please see. Specified activities which are exempted. Municipality or Gram Panchayat services. So there are 13 specified activities. These 13 specified activities, when provided by government to business entity, is exempted, whatever may be the amount involved. Understood? Now in that first, municipality or Gram Panchayat services as per constitution. I will give an example. So for every point I will give an example. Through example try to understand. Okay. So number 1. Generally, supply of water is the job of the municipality. So for supplying water, they will be collecting some water charges. So like that, they will also supply water to business entities and they will be collecting water charges. Now this water charges collected by municipality or a Gram Panchayat is exempted. What about this water charges collected from individuals, that is excluded from supply? Okay, then that is about this. Second, interdepartmental services. So police department is providing, state government police department is providing services to central government income tax department. So one department will be providing service to another department for which they collect some money, and that is exempted. Interdepartmental services. Sir, is government a business entity? Yes. I told you long back, any person engaged in business is known as business entity. Any person engaged in business is known as business entity. Okay. Then next. So third one. So first one, municipality or Gram Panchayat service, example, water charges. Second, interdepartmental services, police department providing services to income tax department. Then number 3, assignment of right to use telecom spectrum. That is, telecom spectrum is radio frequency waves, and this spectrum will be given by government to various telecom operators for data and voice transmission. So when they allocate this spectrum like 2G, 3G, 4G, etc., when they allocate, they will be receiving two types of consideration. First, for allotting them the spectrum, they have to pay one-time charges. Then for usage of that spectrum, they need to pay annual royalty. See, usually from government, when you take anything, it is like that only. To get that you have to pay one-time charges. To use that, you have to pay annual royalty. That's normal in every case. Okay. For example, I wanted to extract some minerals in the land, for which I will get the contract to extract. So to get the contract to extract, I need to pay one-time charges, and for extraction I need to pay annual royalty depending upon the quantity that I am extracting. Got it? Same way, spectrum, when they allocate to the telecom operators, they will collect one-time charges plus annual royalty. This one-time charges and annual royalty is fully exempted if the spectrum is allocated before 1/4/2016. If it is allocated after 1/4/2016, it is not exempted. It will be taxable. Okay. So that is important. Assigned before 1/4/2016. Then fourth one. What is the difference between third and fourth one? So third one is related to telecom spectrum, but fourth one is related to any natural resources like mines, etc. Okay, any natural resources. But in third point, both one-time charges and annual royalty is exempted, but in fourth point, only one-time charges are exempted, but annual royalty not exempted. Now, sir, anyhow these one-time charges would have been received before 1/4/2016 itself. Why are we trying to learn now? Because anyhow that would have been received before 1/4/2016. Now we are in 2020. So why are we learning this? Because that one-time charges may be payable at once or in installments. Those installments may come now. those installments of one-time charges may come during this period. That one-time charges is there, na? That may be payable at once or may be payable in installments. If it is payable at once it will be paid, and that is anyhow before 1/4/2016, leave it. But when it is paid in installments, few installments may come during this period also, that is exempted. For that purpose only this is given. Then next, number 5. What is the difference between 3, 4 and 5? So in case of 5, it is assignment of natural resources to an individual farmer. But fourth point, assignment of natural resources to any person. And in point number 4, only one-time charges is exempted. But in point number 5, all charges are exempted. And point number 4 should be assigned before 1/4/2016, but point number 5 assigned any time. Got it? So assignment of right to use natural resources. What is that? Usually land, agricultural land will be owned by government. How government will be owning agricultural land? What they will do for the purpose of expansion of roads or any construction of new projects, etc., they will be procuring the land. And when they procure the land, when that much of land is of no use, so then what they will do? They will be giving that land on lease model to the farmers itself for the purpose of agricultural purposes, and they will be collecting some amount as royalty. Example, what has happened in Andhra Pradesh. So lot of the previous government has pooled a lot of agricultural land for the purpose of construction of a capital city. They don't have a capital. Andhra Pradesh don't have a capital city. So therefore they pooled lot of land for construction of the capital city, the previous government. But the current government said it is waste of funds. So let's identify one city as a capital city, and therefore that land whatever they have pooled and they paid money to the farmers, what they can do with that land? So that land they will be giving it to the same farmer on a lease model, and that farmer can use it for agricultural produce, and some money can be taken as royalty. That is exempted. Got it? So now, sir, farmer you are telling, how farmer will come under business entity? Farming is also business, occasion. Farming is a vocation, skill used by way of experience and for living. So therefore vocation, farming is vocation. Any person engaged in vocation will come under business entity. So farmer is a business entity here. Then next, registration charges under any law, that is, so generally for the purpose of vehicle registration or land registration, building registration, company incorporation or registration, like that, under any law we will be paying some registration charges. Those registration charges is exempted. Then safety certificate charges. Safety certificate charges mainly for the factory workers. So factory should obtain a safety certificate for providing proper safety to its workers, and for which they will pay some safety certificate charges to the government. That charges collected by the government is exempted. Then number 8, fee for birth certificate, death certificate, driving license, passport, visa is exempted. So these are the 5 certificates. Sir, these are the 5 certificates for individuals, right? But why is it given here? Because these are received by the business entity on behalf of their individuals. That is, a person is going for like a company has recruited some people and they are sending them for abroad. So now the company will be getting visa and passport processed for that employee. So therefore services are received by the company on behalf of their employee, like that. So a key man insurance policy is taken. So for taking insurance policy they need birth certificate, and for claiming the insurance policy they need death certificate. So that services are received by the business entity on behalf of the individual. Then same way there is a company which is engaged in transportation business. So the drivers who are their employees, for them the driving license etc. will be processed by the company. So services are provided to the company. Understood or not? If these certificates or these services are directly provided to individuals, it is excluded from supply. Then next, consideration for tolerating an act. That is, we entered into contract with government, we breached the contract, now we are paying damages. These damages we are paying to the government for tolerating our act. So therefore that will be covered under exclusion, that is exemptions. So therefore there is no GST on that. So we entered into contract with government, we breached the contract for which we pay some damages. That damages collected by the government is exempted. That is an example for consideration for tolerating an act. Then, sir, what about fines and penalties? Can it also be called as consideration for tolerating an act? No, because fines and penalties payable are for breach of law, not breach of contract, and in that case it is first of all not consideration and we should treat it as not a supply. So please write that, fines and penalties for breach of law, is not consideration, but legal consequence. Therefore it is not a supply. So what does it mean? Fines and penalties are legal consequences of a person. So legal consequences of a person means because they breach the law, they need to pay that fines and penalties. Just because they are paying fines and penalties, that cannot be called as consideration for tolerating an act. It is not a supply. Okay. So you have to write it as not a supply, not as exempted. Suppose if it is breach of contract, then they receive some damages, that is consideration for tolerating an act, that is exempted. Okay, don't forget. Then MOT charges under customs. MOT means merchant overtime charges. This merchant overtime charges will be payable to customs officers because they will be working even after office hours and on holidays for clearing our imported goods and export goods. So therefore this charges payable to customs is exempted. Then apart from this, so here MOT, I am just writing MOT refers to merchant overtime charges. In addition to this, some new activities were added here. To the list, and these new activities, 3 activities, already these 10 were there and 3 more activities were added. So have a look into this. Assignment of right to mine or explore petroleum, crude or natural gas against consideration in the form of petrol or natural gas. This concept is known as profit petroleum. Profit petroleum here. So what is this profit petroleum, sir? So listen. So there will be a revenue sharing contract between government and the leaseholders. Who are leaseholders? Please concentrate. Revenue sharing contract. I am discussing now about revenue sharing contract. Between government and leaseholders. What is that? See, these oil refineries are there, na? These oil refineries for extraction of this crude oil or natural gas. So they will be entering into contract with the government. So government will be assigning them right to extract the crude oil or natural gas, and for which out of the total revenue that is generated, so leaseholders, who are leaseholders? Leaseholders are oil refineries or oil extraction companies which are engaged in extraction of crude oil and natural gas. So who are leaseholders? So leaseholders or oil refineries engaged in oil refineries or oil companies which are engaged in extraction of crude oil or natural gas. Okay, so now what government will do, they will be giving them right to extract. Okay, so now some revenue will be generated. So what they will do, out of extraction they will sell, correct? So some revenue is generated, revenue from operations. They got some revenue from carrying out the operations. Okay, operations, by doing some operation, that is extraction and sale, they got some revenue. This revenue, what will happen? So out of this we will divide it into two: cost and profit. Cost and profit. What is cost? Recovery of expenses incurred for extraction. That is recovery, that is cost, that is recovery. And profit is after reduction of cost, the balance is profit. Now, so this cost will go to whom? Will go to the leaseholders. So to the leaseholders, this will be recovered by the leaseholders. So which will be known as cost petroleum. And that cost petroleum is nothing but recovery of money invested in the project, that is known as cost petroleum. Now out of this profit, so fully it will not go to government. So what will happen? A portion will be taken by the leaseholders. And remaining portion will go to the government. So that portion which is going to the government is known as profit petroleum. And that profit petroleum is exempted. Is it clear or not? Then what about cost petroleum? Not a supply. What about cost petroleum? It is not a supply. Why not a supply? Sir, my money I am investing, I am recovering, sir. Where from there is a supply? So it is not a supply. Is it clear? So you need to understand this. This is about the revenue sharing contract between government and leaseholders. So that profit petroleum is exempted. Okay. So that is that point here about that profit petroleum concept. Point number 11. Point number 12. Guarantee commission for guaranteeing the loans taken by PSU. Public sector undertakings. So lot of public sector undertakings are there, like Indian Oil Corporation or Bharat Heavy Electronics Limited, like that lot of public sector undertakings are there, and these public sector undertakings will be taking unsecured loans from banks. When they take unsecured loans from the banks, so the bank should get a guarantee, because these public sector undertakings will take loans, and tomorrow if they default, then what will happen to the banks, correct? So that's the reason why banks will ask for a guarantee. Now government will give guarantee, because public sector undertakings are nothing but government invested companies only. So therefore these public sector undertakings, when they take loans, government will give guarantee. But for giving guarantee, government will charge a guarantee commission from the public sector undertakings. So that guarantee commission charged by government from the public sector undertakings is exempted. Understood? So guarantee commission for guaranteeing the loans taken by PSU, that is exempted. Then next, 13. Services provided by state government to excess royalty collection contractor by way of assigning right to collect royalty. Services provided by state government to excess royalty collection contractor by way of assigning right to collect royalty. So this point we will discuss. It is little bit tricky to understand. So please focus, concentrate. It's a very important point. If at all a question is given in exam, we should not make any mistake. So please concentrate. So what is this excess royalty collection contractor concept about we are discussing? First, there is a state government. There is a state government. And this state government, what they will do? They will be assigning right to use natural resources. They will be assigning right to use natural resources to a person. Okay. So to one leaseholder, mining leaseholder. So they will be assigning one right to use natural resources for a royalty. That royalty will be variable royalty. Okay. So first there is a contract between these two parties. What is that contract? As per that contract, first there will be a contract between these two parties. So what is that? State government assigned right to use natural resources, assigned right to extract minerals, right to extract minerals with a royalty of rupees 10,000 per ton extracted. Rupees 10,000 per ton extracted. So that is the royalty. So the royalty is fixed royalty or variable royalty. It is variable royalty. It is not fixed royalty. But state government wanted revenue fixed. They don't want variable revenue. They wanted fixed revenue because their expenses are fixed. So therefore, what they will do? They will appoint one person called as excess royalty collection contractor. And what this excess royalty collection contractor will do? Will receive variable royalty VR and will pass on fixed royalty to the state government. Will be receiving variable royalty and will be passing on fixed royalty to the state government. Understood? So that mining leaseholder will receive variable royalty and will be passing on fixed royalty to the state government. Understood? For example, if the mining leaseholder is extracting somewhere 40 tons. So 40 tons into 10,000 rupees per ton. So that is equals to rupees 4 lakhs. But what excess royalty collection contractor will pay? Say always there is a fixed royalty of 5 lakhs that is payable. Okay. I am talking about per annum. Okay. For the sake of numbers, I just took small numbers. So 4 lakhs per annum. So here 5 lakhs per annum is payable. Now this excess royalty collection contractor, so a mining leaseholder will pay GST on what? Mining leaseholder will pay GST on 4 lakhs to the government under RCM because services provided by government to business entity is covered under RCM. There is no exemption here yet. There is no exemption because it is not assigned before 1/4/2016. Even if it is assigned before 1/4/2016, the position will be same because annual royalty is not exempted if it is assigned before 1/4/2016. Only one-time charges is exempted, not annual royalty. So annual royalty is taxable. Even if it is assigned before 1/4/2016, annual royalty is taxable. So even if it is assigned after 1/4/2016, annual royalty is taxable. Is it clear or not? So annual royalty is taxable anyway. So here mining leaseholder will be paying, this mining leaseholder will be paying GST to government under RCM. The mining leaseholder will pay GST to government under RCM. So GST payable under RCM, GST payable under RCM equals to, mining leaseholder will not pay on fixed royalty, they pay on variable royalty only, because how much royalty they pay, on that only they will pay GST. So 4 lakhs into 18%, so that is equals to, so 4 lakhs into 18%, 72,000 is paid by mining leaseholder to government. Sir, state government only now, why it is taxable? See, all government, state government or central government is a person under GST and GST is payable, okay. So now mining leaseholder will pay GST under RCM 72,000. Now ERCC got 4 lakhs, but how much ERCC is paying to the government? How much ERCC is paying to the government? 5 lakhs, means he pays extra 1 lakh. So when he pays extra 1 lakh, now ERCC is exempted to the extent of, now what is the service here? ERCC has got the right to collect the royalty and remit the royalty. So for that right they got, so they will be exempted from payment of royalty to the extent what mining leaseholder has already paid. So ERCC is required to pay GST. How much GST that ERCC is required to pay? Please see, ERCC is required to pay GST on 1 lakh difference, that is 1 lakh into 18%, that equals to 18,000 is payable by ERCC. Now, so ERCC is exempted to what extent? So when ERCC, so when fixed royalty is greater than variable royalty, when fixed royalty is greater than variable royalty, then variable royalty is exempted, but GST payable on fixed royalty minus variable royalty. But GST payable on fixed royalty minus variable royalty, okay. So if fixed royalty is greater than variable royalty, fixed royalty how much? 5 lakhs, variable royalty 4 lakhs, then variable royalty is exempted. In whose hands? ERCC is not required to pay any GST again on variable royalty, because already it is paid by the mining leaseholders, but GST payable on the difference. Now, sir, ERCC is getting a loss in this case. Yes, ERCC is getting a loss in this case. Now we will see another situation where ERCC will get a gain. Now see this. So this is when fixed royalty is greater than variable royalty. Now I am taking another situation where fixed royalty will be less than variable royalty. Let's see that. So it is not 40 tons and the amount will be, say, if it is 60 tons. If it is 60 tons, let's see what will happen. So when it is 60 tons, let's see what will happen, okay. So GST payable under RCM. Now concentrate. It is 60 tons, okay. I'll take 70 tons, I'll take 70 tons, which means 7 lakhs per annum is received by ERCC, but ERCC is required to pay only 5 lakhs. So now they got a surplus of 2 lakhs. That is the benefit they got. That's what the right they got. That's the right they got from state government. That's the right they got from state government to retain the excess royalty. So now GST payable under RCM by mining leaseholder is on 7 lakhs. So 7 lakhs into 18%, that is equals to 7 lakhs into 18%, 1,26,000. So that much amount of GST mining leaseholder will pay to government. Now whether ERCC is required to pay any GST? No GST. No GST. Why? Because they paid only 5 lakhs, but already GST paid by the mining leaseholder is on 7 lakhs. So therefore, if fixed royalty is less than variable royalty, if fixed royalty is less than variable royalty, then entire fixed royalty is exempted. Then entire fixed royalty is exempted. So therefore, there is no GST payable by ERCC. Now what ERCC has got? Surplus. How much surplus he got? 2 lakhs. So now in 1 year they got a loss. How much loss they got? 1 lakh plus 18,000. 1 lakh 18,000 is their loss in 1 year. But another year it is 2 lakhs gain. So from this 2 lakhs, that 1 lakh 18,000, if it is adjusted, still they are at profit. Like that ERCC will get. So what ERCC is actually doing, they are taking the risk. They are taking the risk. They take variable royalty and they pass on the fixed royalty. Now why state government will do that? Because state government will always get a fixed revenue so that they can meet their expenses happily without any disturbance. Okay. So then, sir, ERCC is getting benefited. Of course, ERCC is getting benefited because take the risk. He is taking the risk, so he is getting benefited. Very simple as that. So why we invest in mutual funds? Because we don't want the risk. We want a guaranteed return. So mutual funds will bear that burden, will bear that risk. Whereas if you directly invest in the stock market, you get more return than what mutual funds are getting. You get more return than what mutual funds are getting. So directly you invest now, but there is a risk, huge risk that you have. Whereas mutual funds, when you invest, you don't have risk. So you will get a guaranteed return. So for that reason, we invest in the mutual funds. Understood or not? So therefore, like that, state government directly they can collect, but they have a risk. What if sometimes they get less royalty, sometimes more royalty? That's the reason why they will be giving that risk to ERCC. They will appoint one person as ERCC. Sir, who is ERCC? ERCC is another person who is ready to take the risk. And they are not government department or government body and all. Majority of the cases that ERCC will be relative of chief minister or any minister. Okay. You understood what I mean to say. So therefore, that's how the concept of ERCC is there. Now, what is the ERCC? What is the benefit that ERCC gets? ERCC gets the right. What right? To collect and retain excess royalty and pay only the fixed royalty. For getting that right, are they required to pay any GST? They are required to pay GST only when the fixed royalty is greater than variable royalty. On the difference they need to pay GST. But when fixed royalty is less than the variable royalty, anyhow GST would have been paid by the leasing holder on the variable royalty. So therefore they don't have to pay any GST. So this is the concept of that excess royalty collection contractor which we have. So services provided by state government to excess royalty collection contractor by way of assigning right to collect royalty is exempted. To what extent? To what extent it is exempted? To what extent it is exempted? Please listen. If fixed royalty less than variable royalty, fixed royalty greater than variable royalty. If fixed royalty is less than variable royalty, so fully it is exempted, no need to pay GST. Then when fixed royalty is greater than variable royalty, then variable royalty is exempted, but GST payable on, what? GST payable on fixed royalty minus variable royalty. Okay. So please make note of this. Please make note of this. FR means fixed royalty, VR means variable royalty. If fixed royalty is less than variable royalty, fixed royalty less than variable royalty. 1 second here, 1 second. Fixed royalty is less than variable royalty, correct only. So on variable royalty already GST would have been paid by the leaseholder to the government. So therefore full royalty is exempted. When fixed royalty is more than variable royalty, mining leaseholder would have paid GST on variable royalty, so that much is exempted. So on remaining, this person has to pay GST. Okay. But GST payable on fixed royalty versus variable royalty. This is about that excess royalty collection contractor. So we completed these 13 exemptions. These are specific exemptions when provided by government to business entity. Now, apart from this 13 exemptions, we have other cases, other services not covered under the general, not covered under the specific exemptions. Then we have two general exemptions. What is that? Services provided by government to business entity whose turnover during the previous year does not exceed the threshold limit. You try to understand threshold limit. Whose turnover during the previous year does not exceed the threshold limit. What is the threshold limit? We will see later. So right now try to understand. Does not exceed the threshold limit. Okay. Then it is exempted. But this exemption is not applicable in case of renting of immovable property. This exemption is not applicable in case of renting of immovable property. Then value per invoice does not exceed 5,000 rupees. Value per invoice does not exceed 5,000 rupees. In all other cases, it will be taxable. And who will pay GST? If that service is renting of immovable property service, and if the recipient is registered recipient, that recipient will pay GST. Otherwise, government will pay GST under forward charge mechanism, and any other services, GST is payable by the recipient. GST is payable by the recipient under RCM. Okay. Now, related to this services provided by government to business entities, I am giving you some illustrations. Okay. So now you need to just understand that illustration, and when I discuss the answer, you can correlate. You don't have to give any answer, but just try to understand. Now, so you quickly go through this once, that is services provided by government to business entities. So we have specific exemptions, general exemptions, and in other cases it will be taxable. Okay. So this discussion I am just putting in the form of an illustration. Now, you can, by the time I write this illustration, you please go through that chart. Go through that chart. Illustration on government services. Illustration on government services. Okay. Sir, in FR greater than VR, okay, you wrote VR is exempted. Yes, but isn't leaseholder. What is this here? Basic here. VR is exempted means VR is exempted in whose hands? About whom I am telling? ERCC. That VR is exempted in the hands of ERCC, not in the hands of mining leaseholder. VR is exempted means in whose hands I am telling? ERCC, in the hands of ERCC. Where is the arrow? Where I have written? Check that properly. Check that properly. See, rather than pulling my legs and questioning whatever I have written is correct or wrong, first check na where I have written that. Related to ERCC I have discussed, not for the mining leaseholder. Mining leaseholder is required to pay GST always. So what is exempted is in the hands of ERCC. So ERCC, the variable royalty is exempted. Understood or not? Then, sir, what is 1 year lock-in in temporary transfer of copyright? See, 1 year lock-in refers to the situation where once they have opted to pay GST under FCM, so that only they have to pay. They cannot go into RCM within 1 year. So author has opted to pay GST under FCM, and for the day when he opted for 1 year, next 1 year, he cannot pay, he cannot go for another option. He cannot select another option and make the recipient to pay GST. That is that. Okay. Is that general exemption is and condition or or condition? That is or condition or not and. These are two separate exemptions. These are two separate exemptions. This is a separate exemption. This is a separate exemption. This is or. Okay. These are two separate exemptions, not and, or. Then say this. Illustration on government services. So what we need to know, first we need to know what is the activity, and then we need to know whether it is supply and whether it is taxable and who is liable to pay GST. Supply, taxable, liability to pay. So these are the three things that we need to know for each activity. Now, number 1, amount collected by government for allowing a person for allowing XYZ Limited to promote their business in government property, or promote their business in holdings against a fee of rupees 20,000, and XYZ Limited's turnover during previous year less than or equals to threshold limit. So this is the activity. Okay. Now by this time you would have read that. So now we need to know whether this activity is supply or not. This is a service provided by government to business entity. So therefore it will not be coming under exclusion from supply. This will be coming under supply. Yes. Why? Because services provided by whom to whom? By government to business entity. Therefore it will be coming under supply. Is it taxable or exempted? That we need to know. It is not covered under the specific exemptions. In the 13 points we don't have this. Municipality or Gram Panchayat services, assignment of right to use telecom spectrum, or assignment of right to use any natural resource, assignment of right to use natural resources to an individual farmer, registration, MOT charges, fee for certain certificate, consideration for tolerating an act, profit petroleum. In that list it is not there. So therefore not covered under specific exemptions. Then we need to refer to the general exemptions. In the general exemptions, first point, turnover of the business entity during the previous year does not exceed threshold limit, therefore it is exempted. But sir, value exceeds 5,000. See, that is separate exemption. If turnover during previous year does not exceed threshold limit, it's okay. We have got the exemption. Even if the value exceeds 5,000, that is relevant, because these are or, not and. Not both should be satisfied. So, whether it is taxable? No, it is not taxable. Because not covered under, even though not covered under specific exemption, under specific exemptions, but covered under general exemption, due to that reason, then liability to pay, not payable, not applicable, because when there is no taxability at all, where from the liability to pay GST arises in this case. Okay. Then sir, for ERCC, will government pay any commission? If yes, is that GST chargeable on that commission? No, ERCC will not get any commission. ERCC will get only the difference. Sometimes when they collect variable royalty which is more than fixed royalty, that variable royalty which they have collected in excess of the fixed royalty is their benefit, that's it. Apart from that, they will not get any commission, etc. and all, okay. Then, because that's not possible, that's why I did not discuss. If it is possible, I would have incorporated. That is not there. That situation of commission itself is not there. Then, number 2, another question. That is, Department of Police, Tamil Nadu provided security services to Taj Hotel, Chennai, against a fee of rupees 4,000 and turnover of Taj Hotel during previous year exceeds threshold limit. Now, first of all, is it supply or not? We need to check. Yes, it is supply. Why it is supply? Same reason. Services provided by government to business entity. Same as above. It is supply. Then, is it taxable? No, it is exempted. Why it is exempted? Because even though turnover during the previous year exceeds threshold limit, but the fee charged does not exceed 5,000 rupees. Therefore, it is exempted. And is it covered under specific exemptions? No, it is not covered under specific exemption. So, same as above, but the exemption is not that turnover during previous year does not exceed threshold limit, but the exemption is what? Value does not exceed. Value of supply does not exceed. Value of supply less than or equals to 5,000. See, we need to check for one invoice how much they are charging. So, for that one invoice, how much is the value mentioned in that invoice? Less than or equals to 5,000, then it is exempted, like that. Then, liability to pay GST not applicable, because first of all, it is not taxable. Then the liability to pay GST shall not arise. Okay. Then, I am continuing further here. So, please concentrate. Now, this is next activity. Number 3, please concentrate. State government of Karnataka gave a house on rent to Mr. Ram against a rent of rupees 4,000. Now we need to know whether it is supply or not. Whether taxable or not, and liability to pay GST. So actually it is not a supply. No, it is not a supply. Why it is not a supply? Because it is not covered under 4 specified activities. So it is not covered under 4 specified activities. This is house given on rent to Mr. Ram, not to a business entity. Mr. Ram is not a business entity. So Mr. Ram not covered under 4 specified activities. That's why. Not covered under 4 specified activities. That's why it is not a supply. When it is not a supply, taxability and liability to pay GST shall not arise. Then number 4, concentrate. State government of Maharashtra gave a portion of a commercial complex gave a portion of a commercial complex to Messrs. Sujai Traders against a rent of 10,000 and turnover of business entity during previous year less than or equals to threshold limit. Now in this case, so whether it is supply or not, we need to know it is supply. Why it is supply? Services to business entity, so it is supply. Whether it is taxable or exempted, we all will think that turnover during the previous year does not exceed threshold limit, therefore it is covered under general exemption. No. So it is neither covered under specific exemption nor covered under general exemption, and it will be taxable because the turnover during the previous year does not exceed threshold limit point is not applicable for this case. That is first general exemption, that is not applicable. Please refer to the chart. This exemption is not applicable in that case, renting of immovable property. So neither covered under specific exemption nor covered under specific exemption nor covered under general exemption. Then, but here they did not give that person is registered. Turnover during previous year does not exceed threshold, but current year we don't know what is the turnover. So they did not give it as registered. So I told you, when they are not giving it as registered, we should take it as unregistered. So as the recipient is unregistered, who will pay? Renting of immovable property. If the recipient is unregistered, liability to pay GST is on state government of Maharashtra. So because it is renting of immovable property, and recipient is unregistered, that's why. Recipient is unregistered due to that reason. Then next one. So last one here. Same as above, except that turnover during previous year exceed threshold and Messrs. Sujai Traders is registered. Okay, same as above, except the turnover during the previous year exceeds threshold limit and Messrs. Sujai Traders is registered. Again same answer, it is supply, services to business entity, and next it is not exempted, taxable, same as above, the position will not change, taxable, but the liability to pay GST is not on state government of Maharashtra, it is on Messrs. Sujai Traders, because renting and recipient is registered. Due to that reason. So this is with respect to government services. Like this the questions will be in exam here. So we completed the entire government services. Now we understood what is covered under RCM. Services provided by government to business entity, wherever it is taxable, in that case, if it is renting of immobile property and the recipient is registered, it is RCM, otherwise FCM. If it is any other service, it is always RCM. Liability to pay GST is on the recipient, that is business entity. Okay. So this is page number 103. So we completed along with the exemption related to government services. So page number 103. So we completed that government or local authority services. Refer page number 103. Okay. Then next, overseeing committee services to RBI in relation to restructuring NPAs. There are some services which are exempted in relation to RBI that we are discussing now. Okay. That is services provided by RBI. So in banking sector I have given that. So have a look into that. So please take banking and other financial services. You find it difficult to turn the pages? Because what other work you are doing here? You are not writing anything. You are only listening. Then at least turning the pages you do, so that you will be active. Okay. So please look into page number 96. Banking and other financial services. See this. So there is one query. I will quickly complete that and I will come back. Sir, in illustration 3, state government gave house on rent to Ram is not a supply. What if Mr. Ram is a CA working as a CA in a company or practicing on his own? That is, what if he is a chartered accountant working for a company? Then also it is individual, not a business entity. What if the chartered accountant is practicing on his own? Means they are business entity. Then it will be services provided to business entity. Simple. Then see this. So whenever services are provided by RBI, please look into page number 96 here. Services provided by RBI is fully exempted. Services provided by RBI is fully exempted. Services provided by RBI. Now to RBI we are discussing. Suppose if RBI is importing any services where the supplier is located outside India. So supplier is located outside India and RBI is importing services, that import of services is exempted. If it is in relation to management of foreign exchange reserves. What if they are importing any other services? Then it will be taxable under RCM. So RBI outward supply is fully exempted. Never they will pay GST. Now their inward supply. They are importing services from outside India. If it is in relation to management of foreign exchange reserves, it is exempted. If it is any other import of services, it is taxable under RCM, and RBI is not a non-taxable recipient. RBI is not a non-taxable recipient. RBI not a non-taxable recipient. Why? Because they are not coming under government importing services for other than business or commerce. First of all, they are a body under government, not government. So due to that reason, so import of services by RBI in relation to management of foreign exchange reserves is exempted. Any other services is taxable under RCM. This is with respect to import of services. Now, suppose if they receive services from a person located within India, and if the service provider is a overseeing committee, what they will do? This overseeing committee will restructure the NPA, will restructure the non-performing assets, and for which they get a commission from RBI. So they provide services to the RBI by way of restructuring of the NPAs, for which they get commission. On that commission, they will not pay GST, but RBI will pay GST under RCM. It is taxable, and it will be covered under RCM. Suppose if any other service is provided to RBI, then it will be taxable under FCM. Okay. So this is with respect to banking and the RBI services. So services provided by RBI is fully exempted. Import of service by RBI in relation to management of foreign exchange reserves exempted, any other service taxable under RCM. If services are issued by RBI within India, always taxable. In that if it is overseeing committee to RBI, taxable under RCM, any other service taxable under FCM. That supplier only should pay GST. So this chart you need to remember. This is related to that overseeing committee point. Okay. So please take that list of services and there write down, refer page 96. Refer page number 96. Refer page number 96. What I am doing to all services which are covered under RCM, I am linking with the exemptions. Okay. Then T, transfer of right to use by any person to promoter in relation to development rights or floor space index for construction of a project or long-term lease of land 30 years or more. So now in this case it will be covered under RCM. So this is a very important point here and very tricky point also. So let's try to understand what is this about. Now there are three terms which we need to understand: FSI, TDR and long-term lease. All these are in relation to land, transfer of right to use land. Okay. So now we are trying to understand that. And before that, one doubt. Sir, if overseeing committee provides services other than restructuring NPA to RBI, whether it is taxable? Why? Overseeing committee role itself is to restructure NPA. Why they will do some other services? Their role itself is restructuring of NPAs. Their role is not anything else. Their role itself is restructuring NPAs. So that's a hypothetical question. Impossible it is. How they will provide some other services? Now say this: FSI, TDR and long-term lease. These are in relation to transfer of right for a land. Okay. So now first, FSI, floor space index. Floor space index. Now please don't ask any questions until the time I complete this concept. Okay. So floor space index, FSI. So what is this floor space index? We are trying to understand first. That is, generally when there is a piece of land, and on this land how much we can construct, how much could be the built up area is known as FSI. So say the plot area is somewhere 1000, the plot area is somewhere 1800 square feet. The plot area is somewhere 1800 square feet. On this plot area, how much I can construct is known as FSI. So there is a building that will be constructed on this plot of land. So there will be a building that will be constructed on this plot of land. Okay. So this building which is constructed on this plot of land, there is a building that is constructed on this plot of land, and what is the built up area that we need to know? Built up area. Say the built up area is 2200. Okay, sorry. The built up area is 3600 square feet. Sir, when the plot area is only 1800, how built up area will be 3600 square feet? You have to take all the floors. Put together. That is the meaning of built up area. All the floors. So ground floor, first floor, second floor, like that. All the floors put together, you need to take the built up area. Now, what is the permissible FSI? permissible FSI is 1.9. Permissible FSI is 1.9. So which means how much could be the built up area? Permissible built up area is plot area 1800 into 1.9, that is equals to 1800 into 1.9, that is 3420. So they constructed more than this, so they don't have any FSI left, and even they need to demolish one floor. They need to reduce it to 3420 square feet. They don't have any unutilized FSI. Now, suppose if the built up area is not 3600 square feet, it is 2800 square feet. 2800 square feet. Then how much is the permissible built up area? 3420 square feet. So what is the FSI that is unutilized? Unutilized FSI equals to, so 3420 minus 2800 equals to 3420 minus 2800, so 620 square feet is unutilized FSI. Now what a landowner can do, that unutilized FSI can be given to a builder, and the builder can construct in this plot of land that 620 square feet, and he can pay some money for that. Okay. So this 620 square feet can be transferred to another person. So but what is the unutilized FSI? 620 square feet. So this is what we are trying to understand about the concept of FSI. But what happens, we will see later. But FSI is this. What they can do with that FSI? They can transfer it to a builder. For which they get consideration. Are they giving land? No, they are not giving land, but they are giving FSI. What builder will do with that FSI? He will construct one portion on using that FSI, and he will be selling it to outsider, and he will pay you some money. But land you are not giving, you are only giving the FSI related to that. So that is the advantage of this FSI. Then next, there is something called as TDR, transferable development right. There is something called as TDR, transferable development right. What is this transferable development right? Transferable development right refers to a situation where government is taking over my property. So I have a house. And this house, what government is doing, they are laying down a metro line. So government is laying down a metro line. So because they are laying down a metro line, so they need to demolish my house. So metro line is going through my house. So therefore my house gets demolished. And how much is the square feet of this house? Say somewhere 1200 square feet. 1200 square feet. Now this house gets demolished. Then what is the benefit I get? I will be getting, so government will pay, so to the landowner, government will give TDR. So what I need to do? I need to transfer this house. They will demolish the house, for which government will give me TDR, transferable development rights of 1200 square feet. What does it mean? It means virtual land. It means virtual land. TDR is virtual land. What I can do with this 1200 square feet? There is one person who is constructing a building who is falling short of FSI. there is a person who is constructing a building who is falling short of FSI. Now to that person I can transfer this TDR and I will get some money. What is the advantage to the government? So government, without spending 1 rupee, they got this house demolished. They did not pay 1 rupee of compensation also. Gone were the days wherein the government will be paying compensation. Now they gave TDR, transferable development right. And they are telling, we are demolishing your house, take 1200 square feet TDR in the same locality. So when any builder is constructing a big complex, some 20 floor, 30 floor complex, but he don't have that much of FSI to increase the building. So now we can sell this TDR 1200, but they will mention in the TDR in which area you can use this TDR. So say that particular locality we got TDR, we can give it to the builder and builder will give us good compensation, good money for that. What is the advantage to the builder? Builder can increase the construction beyond the permissible FSI. Sir, isn't it wrong, sir? We can increase the construction beyond permissible FSI. Government is only telling this. Government is only telling that we can increase the FSI using the TDR. So when government themselves is telling, so it does not mean it is wrong. So they themselves are only doing this. So this TDR where it is given, using this TDR, we can increase the construction. So therefore builder will buy this. Otherwise builder, see, I am constructing 6 floors. If I construct 2 more floors, only building cost is extra, but I will be making more money out of it. So I will buy the 1200 square feet of TDR. That is the logic behind it. Then there is something called as long-term lease of land. Long-term lease. What is this long-term lease? That is, there is a person who owns a land. There is a big land somewhere, 8,000 square feet land is there. 8,000 square feet land. But that person don't want to sell that land, but want to use the land. So as such he cannot give the land on rent. So he gives the land on lease. He gives the land on lease. What is a long-term lease? Lease for greater than 30 years is known as long-term lease. So the land is given on lease for 99 years. Land is given on lease for 99 years to a builder. Now what builder will do? What builder will do? That builder will construct, apartment on that land. So what that builder will do? That builder will take this land, 8,000 square feet of land, and on that 8,000 square feet of land, 8,000 square feet of land, 8,000 square feet of land, he will construct a big apartment. He will construct a big apartment with multiple flats. Okay, he will construct big apartment with multiple flats, and he will be selling that. That is, he will be selling that flats to others. But it is on the leasehold land, not on the freehold land. It is on the leasehold land, which means those who buy those flats, they need to vacate after 99 years. For 99 years they can use. For 99 years they can use. After that they need to vacate that. Okay. So that is how land the builder will be giving, will be constructing this and will be selling the flats to various buyers. So to various buyers, flats are sold. Understood? To various buyers, flats are sold. Flats sold. Now, so this is how the builder will get money, for which builder will pay some lease amount to the landowner. So this is known as long-term lease of land. Okay. So now what happens? This FSI or long-term lease or TDR given by landowner to the builder for doing construction, for which builder will pay consideration. That consideration may be monetary consideration or non-monetary consideration, and on that consideration GST is not payable by the landowner, GST is payable by the builder under reverse charge mechanism. Okay. So now we will try to look into one small video related to what is this TDR, FSI and long-term lease. Okay, long-term lease is not there, but TDR and FSI concept is there. Just give me One second, I will show you that. Okay, have a look into this video. So this video will give you some clarity about what is the TDR FSI, and even it will also it is a proof that whatever concept I have discussed is there also. Okay, so don't have to have a doubt on me. Whatever he is telling, is it really there or not? You can also do Google, you will be knowing. Okay, so say this. So say this. Now the owner can use this TDR to exceed the FSI of any area where he wants to do the construction. Okay, that is the power of TDR. So this is about the concept of FSI and TDR. Okay. So now what is that we need to understand out of this. So this FSI, TDR and long term lease we have discussed. Now concentrate. There is a landowner. There is a landowner, and this landowner is transferring TDR, FSI or long term lease to a builder or promoter. There is a landowner who is transferring TDR, FSI or long term lease to a builder or promoter. Now when this TDR, FSI and long term lease is transferred to a builder or promoter, TDR, FSI and long term lease is transferred to builder or promoter. This builder or promoter will pay monetary or non-monetary consideration. So will pay consideration. That consideration can be two, monetary or non-monetary. That consideration can be monetary or non-monetary. So monetary means in the form of amount. Non-monetary means few flats that the builder is constructing. So monetary means, say for example, he pays somewhere rupees 40 lakhs. This is monetary consideration. Non-monetary consideration, he gives few flats. As consideration. Say 10 flats too much. Say 2 flats as the consideration. Okay, so 2 flats like that. Consideration can be monetary or consideration can be non-monetary. On this consideration, who should pay GST to government? So GST is payable by builder or promoter to government under RCM. So GST is payable by builder or promoter under RCM. So what is that GST that the builder or promoter is required to pay? Concentrate please. The builder or promoter is required to pay GST to government. The builder or promoter is required to pay GST to government on this inward supply. On this inward supply. Now, 2 flats we need to arrive at the monetary value. 2 flats we need to arrive at the monetary value. Say for example, 2 flats worth rupees 40 lakhs. 2 flats worth rupees 40 lakhs. Now, the promoter or builder is required to pay GST on this consideration under RCM. Okay. Now this is about the inward supply. Inward supply of promoter or builder. We have outward supply of promoter or builder, which is nothing but sale of flats. Sale of flats. So please concentrate here. That is there is one particular day on which CC or FO is obtained. There is one particular day on which CC or FO is obtained. Okay. So CC or FO, whichever is earlier, is obtained. Completion certificate or first occupation, whichever is earlier. This is the date. This is the date on which completion certificate or first occupation, whichever is earlier, is obtained. Now, if the flats are booked before completion, so sale of flats. So flats booked before this date and booked after this date. Flats booked before this date, flats booked after this date. What about the flats booked after this date? So this is CC or FO, whichever is earlier, and this CC or FO, whichever is earlier, this CC or FO, whichever is earlier, is this date. Okay. So now flats were booked before completion or after completion, we need to check. So flats booked, see this, I'm just making a small change. CC or FO, whichever is earlier. Okay. So this is the date. So CC or FO, whichever is earlier. Now flats got booked before the date, flats got booked after that date. If flats are booked after the date, it is excluded from supply. If the flats are booked after this date, it is excluded from supply, and there is no GST, no GST with respect to it. What if flats got booked before completion? GST payable, not excluded from supply, and GST payable. Okay. Now, why sir? Because it will become supply even if part of the consideration is received before completion certificate or first occupation, whichever is earlier. If the flats got booked after completion, it is excluded from supply. And there is no GST. Okay. Excluded from supply and there is no GST. Now, whenever it is not excluded from supply and GST payable, we have a exemption. What is that exemption? Generally, this value of flat includes the value of land, correct? Value of flat includes the value of land, always. Value of flat includes the value of land. When value of flat includes the value of land, so we need to reduce 1/3 towards the value of the land. Reduce one third reduce 1/3 of gross amount towards value of land, okay. So reduce 1/3 of gross amount towards value of the land. Understood? So now let's try to understand what has happened. So total they have sold some flats before completion. Say 40 flats were sold before completion and 20 flats are sold after completion. So total 60 flats. On the 20 flats there is no GST, but on these 40 flats there is GST. Now what will be the GST payable on outward supply? Concentrate. What will be the GST payable on outward supply? So the GST payable on outward supply equals to GST payable on outward supply. So that is, first they need to reduce 1/3 towards the value of the land. So sale value of the flat, say the value of the flat is 20 lakhs. The value of the flat is 20 lakhs. How many flats got booked before completion? 40 flats. This is the gross value. From this I need to reduce 1/3. Means how much I should take? 2/3 I should take. From this I need to reduce 1/3. So which means I need to take 2/3, and on that 2/3 I need to multiply the rate and say the rate is 7.5%. The rate is 7.5%. So therefore that is the GST payable. 20 lakhs is the value of the flat. How many flats sold? 40 flats. 1/3 I need to reduce. So I will be taking 2/3 into 7.5%. So 20 lakhs into 40 into 2/3 into 7.5%, that comes to 3,99,000 or 39,99,999. So 40 lakhs is the GST payable. 39,99,999 it will come. So exactly 40 lakhs is the GST payable on outward supply. Now this is one exemption. So this is one exemption that we have here. So what is this exemption? Reduce 1/3 from the gross value of the land. This is exemption, one exemption, okay. This is one exemption. Now we have another exemption with respect to it. What is that another exemption? Please concentrate. On the inward supply, GST is payable, but we have an exemption to the proportion of, see these are used for residential flats. Assuming that these are residential flats, we have an exemption. What is that exemption? Proportionate to the residential flats booked before completion, we have got an exemption. So what is that exemption we are trying to understand? Now we are calculating GST payable on inward supply. GST payable on inward supply. What we have done so far is GST payable on outward supply. Now GST payable on inward supply. Who should pay GST on inward supply? Builder or promoter only should pay. Now first, what is the gross liability? What is the gross liability? So gross liability is 40 lakhs is the value of consideration into 18%. Don't get confused between this 40 lakhs and that 40 lakhs. Don't get confused between this 40 lakhs and that 40 lakhs, please, because that 40 lakhs is different. If you are getting confused, I will change this also, not an issue, because I will take 30 lakhs as the value of the flats. 30 lakhs as the value of the flats. So 30 lakhs into 40 into 2/3 into 7.5% I will take. So 30 lakhs into 40 into 2 divided by 3 into 7.5%, that is 60 lakhs is the GST payable. So otherwise you will get a confusion. So this and that 40 lakhs are same. So that is different, this is different. So 40 lakhs into 18%. So 40 lakhs into 18%. 40 lakhs into 18% is 7,20,000. So 7,20,000 is the gross liability. Now we have got an exemption here. What is that exemption? What is that exemption? Please concentrate. out of this 7,20,000, out of this 7,20,000, how many flats booked before completion we need to take? How many flats booked before completion we need to take? So number of flats booked before completion is 40. Out of the total flats 60. Out of the total flats 60. So number of flats booked before completion 40 divided by total number of flats 60. So therefore that much will be exemption. So 7,20,000 into 40 divided by 60, that is 4,80,000. 4,80,000 is exempted. So balance is the GST payable. So balance is the GST payable. So 7,20,000 minus 4,80,000. Therefore 2,40,000 is the GST payable. So there are two exemptions. There are two exemptions here. So this is the concept of two exemptions related to the sale of flats. Now again I am repeating this discussion from the beginning, so concentrate into this. First, there is a landowner and there is a builder or promoter. See, at once you may not be able to understand this, so you need to again have a look into it again. Okay, so I am repeating it again. You also go through this video later, and then if you have doubt you ask me, but don't ask me to repeat again because already it is there in the video, but I am repeating it now once again. Okay, please listen. So landowner is giving to the builder or promoter TDR, FSI or long-term lease, for which builder is paying the consideration, and that is covered under RCM. So GST is payable by the builder under RCM. Next, what is the consideration? That can be monetary, that can be non-monetary. If it is monetary consideration, they are paying 40 lakhs as consideration. If it is non-monetary, they will be giving 2 flats worth rupees 40 lakhs as consideration, like that. Now, what builder is doing with that FSI, TDR or long-term lease? He is constructing flats. What flats? All these are residential flats here. All these are residential flats. All these are residential flats. So residential flats booked 40 and flats booked. Again, which flats? Residential flats. So residential flats booked after completion 20, before completion 40, after completion 20. So total 60 flats they have made out of this. Now for the 20 flats there is no GST because it is after completion certificate or first occupation, whichever is earlier. Due to that reason there is no GST on the 20 flats, but on the 40 flats there is GST payable, that is not excluded from supply. But while paying GST, we have got one exemption. What is that? We need to reduce 1/3 towards value of land. Means you need to take from the gross value only 2/3. So take the value of the flat including the value of the land and into number of flats, 40 flats, into 2/3. So that will be taken as the value, and on that 7.5%. Sir, how that 7.5%? That rate will be given in the question, don't worry. So this 60 lakhs will be the GST payable on outward supply. So we learnt one exemption. Whenever there is a sale value of the flat including the value of land, you need to reduce 1/3, means you need to take 2/3 as the value. Then with respect to inward supply, they need to pay GST, but there one exemption is there. What is that exemption? To the extent of GST, to the extent of flats booked before completion is exempted. To that proportion it is exempted. So first you need to take how much is the GST payable, that is 40 lakhs into 18%, 7,20,000. From this 7,20,000, 40 by 60 is exempted. So remaining is GST payable under RCM. Okay, so this is about these two exemptions related to the sale of flats. Okay, so now one RCM point we discussed, that is inward supply covered under RCM, that is FSI, TDR and long-term lease, and two exemptions we discussed in this chart. Okay, now this information I am showing you in construction services. Actually this discussion we have made in construction services, so you please have a look into that. Construction services, page number 107, page number 107, page number 107. Transfer of development rights Floor space index or transferable development rights by the landowner to promoter or builder is exempted, plus long-term lease of land 30 years or more by the landowner to the promoter or builder is exempted, provided the land is used for construction of residential flats. What if the land is used for commercial flats? That exemption in case of inward supply not available. So that exemption is available only in case of residential flats, and such flats are booked before the completion certificate. And how to calculate the exemption? Value of inward supply into 18% into floor area of the flats booked before completion certificate or first occupation, whichever is earlier, divided by total floor area of all the flats in the project. Okay, so this way we need to calculate the exemption. So page number 107, you refer there, because we have an exemption in this context, that's why. So this TDR FSI long term lease, refer page number 107. Refer page number 107. Next. So few questions related to this, let me answer. Sir, in long term lease, the builder sells the flats to buyer. The buyer pays consideration for the flat. Then how can we ask the buyer to vacate the flat just because the seller's lease period is over? Because the flat is constructed on a leasehold land. So whatever buyer pay is only for the 99-year period. After 99 years, so the buyer will not have. That's the reason why flats which are constructed on leasehold land will be cheaper compared to flats on freehold land. Because flats constructed on freehold land, that UDS will be yours. A portion of land will be yours. But in case of a leasehold land, so 99 years only that flat is yours, and at a cheaper rate you will be getting those flats. And you don't have to pay. For you the advantage is, rather than paying rent, you can pay some lump sum amount and you can stay there, and so that 99 years, it is like, by the time we take that property, our generation and our kids generation, so we can happily stay 100 years there. 99 years is a big time here, and thereafter it will be vacated, but see the rent that we are saving. Okay, so that's why many people go for lease on land, but usually it is cheaper compared to the flat which is on freehold land. Then when government gives TDR to building owner, at that time no one needs to pay tax. Is that right? Exactly. There is no need to pay any GST when government is giving that right to the builder or that person. So but whenever they sell the TDR to builder, at that time the builder will pay GST on that amount, how much he pays. Because government is not literally giving money, they just give a certificate called as TDR. Then that is not a supply. So government just gives a certificate, they are not giving any money, they are just giving a certificate. That certificate cannot be treated as consideration. But that certificate, when they give it to the builder, they get money. At that time it is supply, on that builder will pay GST under RCM. Sir, what is the value of 30 lakhs referring to? 30 lakhs is value of flat. So value of flat is 30 lakhs. So flat value. So this 30 lakhs is there, na? That 30 lakhs is flat value including land, including value of land. Then, sir, in case of outward supply, who is liable to pay GST? Is it the builder or the recipient? That is builder only. See the arrow mark properly. That is not RCM, that is FCM. So that is FCM on sale of flats. So FCM, that's the reason why GST payable on outward supply by the builder or promoter, clearly I have given, that is FCM. This is FCM liability and this is RCM liability. Okay. Next. Sir, at the time of getting right to use land, how one can ascertain how many flats booked before completion or after completion? That's the reason why they will not pay GST now. The time of supply is not at the time when they get the right. The time of supply is at a later point of time. So they don't have to pay GST now. They need to pay GST upon completion certificate. So this 2,40,000 they need to pay at the time of completion certificate. That is the time of supply in this case. So the time of supply is not as and when the builder or promoter gives the TDR or FSI to the landowner. Okay. So this is with respect to the concept of the TDR, FSA and long term lease. I don't know whether it will be asked in exam or not, but this concept is there. Okay, I don't think so that they will be testing it here, because that's too much deep, and I don't know whether it will be tested or not. But if at all tested, you can write. That confidence I have. You may not have the confidence, but on you I have, you can write. Okay, so see this next one. Yes, so we have completed. Sir, CG got. S for security lending, I for import of services, R for renting of motor vehicles, then C for copyright services, then G for GTA services, then G for another G for government services to business entity, O for overseeing committee services to RBI, then T for transfer of right, that is FSA, TDR and long term lease in relation to land. Then next salads in that. Yes, sponsorship services by organizer of a event to firm or body corporate. So there is a person who is organizing a event and he gets sponsorship money for allowing a person to promote his brand, and this money received by the organizer of the event, if taxable, liability to pay GST on the recipient, the one who pay, provided the recipient is body corporate or firm. If the recipient is other than body corporate or firm, then it will be taxable under FCM. Okay, so generally in case of sponsorship services, we should not think the one who pay money is the supplier of service. No, the one who accepts money is the supplier of service. That is, organizer of the event is the supplier of service. He is allowing the person to promote their brand. Now if you see IPL, so lot of ads you are seeing na, this Unacademy ad and even Byju's ads. So all these are what brands which are being promoted, and for which they need to pay money to IPL board. So therefore, organizer of the event will be collecting money from the person. Okay, this is not only in the connection of sports, this is in connection of any event. So cultural event, gaming events, sporting events or any functions, etc. For all these things, this will be applicable. So there is a event. Someone is organizing the event. For organizing the event, they will be getting money. For organizing the event, they will be getting money. So on that money, if taxable, there are few exemptions. There are few exemptions. So wherever it is taxable, liability to pay GST is on recipient. If recipient is body corporate or firm. If recipient is other than body corporate or firm, supplier has to pay GST under FCM. Okay, so now related to this, we have some exemptions, so that we are discussing now. So please have a look into this. So please take sports related services. Please take sports related services, page number 105. Please take sports related services, page number 105. Say this. That is, there is a recognized sports body. There is a recognized sports body and an unrecognized sports body. Now listen, please see this. There is a recognized sports body, unrecognized sports body. BCCI is an example of recognized sports body. IPL is an example of unrecognized sports body. Now, when there is a recognized sports body which is providing sponsorship services to any person, it is exempted. When there is a recognized sports body which is providing sponsorship services to any person, is exempted. So sponsorship services to body corporate or firm, exempted. Sponsorship services to sole proprietor, exempted. So whenever a recognized sports body receives money, that is exempted. Now, what if an unrecognized sports body receives money? So if they provide that is taxable. That is taxable. We don't have exemption. So exemption is available only when a recognized sports body receives money. When an unrecognized sports body receives money, it is not exempted, it is taxable. But who will pay? If the recipient is body, corporate or firm, it will be covered under RCM. But if the recipient is other than body, corporate or firm, it will be coming under FCM. Got it? So in case of sports, sponsorship services is exempted if it is an amount collected by a recognized sports body. If it is amount collected by unrecognized sports body, it is taxable. Then who will pay GST? If the recipient is body, corporate or firm, that body, corporate or firm will pay tax under RCM. If the recipient is other than body, corporate or firm, then the supplier will pay tax under FCM. And this particular service, taxability, RCM, FCM sponsorship only for sports? No, it is for anything, but I just gave sports because one exemption is there related to sports. But any sponsorship service other than this recognized sports body need not be for sport. Anything it will be taxable, wherein the recipient we need to check body, corporate or firm. If recipient is body, corporate or firm, they will pay. Otherwise supplier has to pay. That is the one who takes money should pay. So this is about that. In this connection, we should know who is a recognized sports body. Who is a recognized sports body? So please see this. Recognized sports body is any body or association under National Sports Federation, like BCCI, Indian Hockey Federation will come into that category. Example, BCCI, Indian Hockey Federation, Indian Hockey Federation. So these people will come under National Sports Federation. Then Inter-University Sports Board, Paralympic Committee, that is for these physically challenged people. Central Civil Services Cultural and Sports Board, National Games as a part of Indian Olympic Association and Panchayat Sport Board. So these are the recognized sports boards, okay, sports body. So whenever these recognized sports body collect money, that is exempted. Okay, in connection with this, one more exemption is also there, that also we will complete. That is, there is a player, there is a person who is a player, referee, umpire, coach or team manager. Team manager. So player, referee, umpire, coach or team manager is providing services to recognized sports body, it is exempted. If they provide services to unrecognized sports body, it will be taxable. For example, Virat Kohli receiving money from BCCI, exempted. Same Virat Kohli receiving money for playing for RCB, taxable. Understood? Player, referee, umpire, coach, team manager to recognized sports body is exempted, to others other than recognized sports body is taxable. Apart from these people, any other person providing service to recognized sports body or other than recognized sports body, always taxable under FCM. So that is selectors, curators and technical experts. Example, technical experts. So these people, so others, all others providing services to recognized sports body or unrecognized sports body is taxable under FCM. Okay, so we have discussed two exemptions related to this. Actually, sponsorship service point we discussed, as there is one connecting point here, so we discussed this sports related services. So please make a reference there. Refer page 105. Refer page 105. For this sponsorship services, refer page number 105. Okay. So up to this we have discussed. So that is sir, CG, got, then in that salads, yes, sponsorship service point we discussed. Now there are few queries. Can builder avail ITC with respect to this? See, actually builder can avail ITC, but there is a restriction, but that restriction you will learn at CA final level. So right now for your exam CA intermediate, builder can avail ITC if they can avail ITC as per the provisions of input tax credit chapter. But usually it all depends upon at what rate they are paying GST. If they pay GST at the rate of 7.5%, 1.5%, it is specifically given as without ITC, means they cannot take ITC. Otherwise, they can take ITC. Okay, it depends upon the provisions that are applicable to them, that you will learn at CA final level in detail. Okay, then, sir, in long-term lease, in our example, how much amount ITC can be claimed by the builder? That's what. So that provisions are not there for CA intermediate, that will be there at CA final, there you will learn. But ITC, if at all they can take, they cannot take 7.42 lakhs, they can take only 2.4. How much they pay, that only they can take. How much they pay under RCM, that much only they can take as ITC. They cannot take 7.2, they can take ITC 2.4 lakhs only. Okay. So this is with respect to this concept, and we will take a break now. We will meet at 9:40, and whatever is your queries, you please post your queries related to the concepts we have discussed so far, and I will respond to those queries. Then I will complete the remaining portion that we have. Okay, thank you. Okay, so I think all your queries I have replied in the chat itself, please check. And in continuation with our discussion, what I have made in the previous session is that we completed about that Sir CG got yes salads in that yes. Then A, agent services, please have a look into it. Insurance agent to person carrying insurance business. Recovery agent, that is, there is an insurance agent who is providing services to insurance company. Now in that case, liability to pay GST is on insurance company under RCM. But we have one exemption in this regard. That exemption is, if the insurance agent is working for rural area branch of the insurance company, then it is exempted. Okay, then same way recovery agent. So I am just giving you some clarity about agent services, agency services. Agency services. Say this. So first we have an insurance agent. So there is an insurance company. There is an insurance company, and this insurance company is having an urban area branch and a rural area branch. Urban area branch and a rural area branch, and there is an agent, insurance agent appointed for this insurance company. There is an insurance agent appointed for this company, insurance company, Mr. A and Mr. B. Mr. A and Mr. B. Now, Mr. A renders services to urban area branch, and that urban area branch pay commission, insurance commission. So that commission is taxable under RCM. Then who is required to pay GST? So GST is payable by recipient. Who is the recipient here? Insurance company is the recipient. Then Mr. B renders services to rural area branch of the insurance company. So services are rendered to rural area branch. For that, rural area branch is paying commission. That insurance company's rural area branch is paying commission. So this is exempted. There is no GST on that. So whenever the insurance agent is working for a urban area branch, that commission is taxable under RCM. If he is working for a rural area branch, then it is exempted. This is with respect to insurance agent and insurance company services. Okay. Then next, like that we have one more exemption also. So suppose sir, if there is a sub-agent, for the insurance agent, such concept do we have? No, we don't have the concept of sub-agents to the insurance agents. We don't have that concept. So they will be called as insurance agent only. they will be called as insurance agent only. So sub-agent concept is not there in insurance agent. Understood? So therefore this is not there. Now let's try to understand with respect to other one, that is business facilitator services. Business facilitators and business correspondents are intermediaries appointed by the bank to extend the services of the bank in the area where they don't have a branch. Okay, business facilitator and business correspondent. Now related to that we are discussing, please see, there is a banking company, and this banking company has got a business facilitator, and there is an agent of business facilitator, okay. So we have agent concept in business facilitator here, but we don't have agent concept in insurance agent. Now this business facilitator will be extending the banking services in the place where bank is not having any branch. Now this banking company has got an urban area branch and a rural area branch. And rural area branch. And this business facilitator is working for urban area branch. So one person, Mr. A, is appointed as business facilitator to extend the urban area branch operations outside the territory of urban area. Okay, so Mr. A is appointed as business facilitator for urban area branch. Then Mr. B is appointed as business facilitator for rural area branch. Okay, Mr. A is appointed as business facilitator of urban area branch. Mr. B is appointed as facilitator of rural area branch. Now Mr. B renders services to rural area branch. Mr. B renders services to rural area branch, for which Mr. B receives some commission. That commission is exempted. Now Mr. A renders services to urban area branch. For which Mr. A receives commission, and that commission is taxable. Under RCM. No doubt. Okay, then who will pay GST? The banking company will pay GST. Now there is an agent of business facilitator. That is Mr. X and Mr. Y. So now this agent of business facilitator, Mr. X and Y, is rendering services to business facilitator. Okay. Now Mr. Y rendering services to business facilitator who is working for a rural area. So as the main commission is exempted, even this sub-agent's commission is also exempted. No doubt about that. But in this case, on this commission, it is taxable. Under FCM. Actually, in my main class, regular class, what I have explained is that business facilitator and business correspondent should be treated same, and whatever is their services, that will be common. So actually I mean it, and that's where even an exemption it is given. But what ICI interpreted is that they interpreted in a different way, but ultimately for your exam, whatever is there in ICA study material is only applicable. So what they gave is that business facilitator to banking company, business facilitator to banking company is covered under RCM. Then agent of business correspondent to business correspondent is covered under RCM. Please see the table, point number 4 and point number 5. Business facilitator to banking company, agent of business correspondent to business correspondent. While discussing, I discussed business correspondent and business facilitator together. But actually, what ICA gave is a literal meaning that if it is a business correspondent to banking company, that is not coming under RCM. Only business facilitator to banking company is only covered under RCM. So like that they gave. So same way, agent of business facilitator to business correspondent to correspondent is only given, but agent of business facilitator to facilitator, business facilitator not given. So that's where it is not given, therefore it is FCM. So whatever you have learned, so please make the correction accordingly in this area. So in this area, ICA has given a different perspective altogether, and they are telling, so business facilitator and correspondent should not be brought into the same footing. So they are telling business correspondent is different from the business facilitator, and therefore only business facilitator service to banking company is under RCM, but business correspondent to banking company is not in RCM. Same way, agent of business correspondent to business correspondent is only under RCM, but agent of business facilitator to business facilitator is not in RCM. So therefore, we need to treat it this way. This is as per ICAI study material. So we need to follow this only for exam purpose. Okay. Now, so therefore, we need to take it this way only, and this is in case of business facilitator. Same way, we will discuss a chart for business correspondent services. Same way, we will discuss a chart for business correspondent services. So please see. So this is business facilitator. Now we are discussing business correspondent. Okay, business correspondent. Concentrate. There is a business correspondent appointed. Business correspondent. See, both are intermediaries. Actually, if you ask me, both are correct. Both are same. Business facilitator and business correspondent are same. But that is a view taken by ICA. That's the reason why I also changed this explanation. Okay. So, business correspondent, BC. Then, business agent of business correspondent. Agent of business correspondent. Okay, agent of business correspondent. That exemption point is same, no change in that. That exemption point is same, correct only, no change in that. But this portion changes. So listen carefully. Business correspondent services to banking company is not covered under RCM. It is taxable. It is taxable, but not covered under RCM, it is FCM. But business facilitator service to banking company is taxable under RCM. Business correspondent service to banking company is not taxable under RCM, it is taxable under FCM. Same way, agent of business correspondent to business correspondent, that commission is taxable. That commission is taxable, not under FCM, but under RCM. Not under FCM, but under RCM. So Mr. A only should pay GST in both the cases. But here, X services to A, agent services to the business facilitator is covered under FCM. So this you need to remember. Even if I explain 1,000 times, it is of no use. You need to understand the difference and you need to remember this. See, it is more of remembering only. So correspondent to banking company, no RCM. Facilitator to banking company, RCM applicable. Then agent of facilitator to banking company, no RCM. But agent of correspondent to business correspondent covered under RCM. So this area alone is little tricky and you need to concentrate. This area alone for these two charts is little tricky and you need to concentrate. You need to remember this, read it again and again and remember. So this is with respect to business correspondent and business facilitator services. Yes, I made an explanation differently in my regular batch, but this is the view given by ICI and the same is even incorporated in RTP. So that's the reason why I am giving you this amended information as per ICI study material. Okay. Then look into the next one. So insurance agent point we completed. Then business facilitator, business correspondent we completed. Now look into recovery agent. Recovery agent to banking company, financial institution or NBFC. So there is a bank or a financial institution or a NBFC which appoints a recovery agent to recover the outstanding loans, for which this recovery agent will get some commission. That recovery agent will get some commission. On that commission, recovery agent will not pay GST, but the bank will pay GST. And there are no exemptions in this context. Okay, there are no exemptions in this context. No exemption. There is no exemptions in this context, so it is fully taxable. Then next, direct selling agent other than body corporate or firm or LLP to banking company or NBFC. Okay, so now concentrate. There is a banking company, there is a banking company or NBFC. There is a banking company or NBFC. Now, to this banking company or NBFC, there is a banking company or NBFC. To this banking company or NBFC, there is a person who is providing services. Okay, who is that? Direct selling agent. Direct selling agent. Who is a direct selling agent? They will sell the banking products. Like we will be getting lot of calls, sir, you need any credit card, you need any loan, etc. So these people are called as direct selling agents. And if the direct selling agent is individual, if the direct selling agent is individual, please see, direct selling agents other than body corporate, firm or LLP. Okay, so other than body corporate or firm, other than body corporate or firm or LLP. So then who will come? That is individual, HUF, etc. Okay, other than body corporate, firm or LLP. If they provide services to the banking company, if they provide services to the banking company, it is taxable or exempted? Taxable only under RCM. It is taxable only under RCM. Understood here? It is taxable under RCM. Suppose if the direct selling agent is body corporate, firm or LLP, if the direct selling agent is body corporate or firm or LLP, then the services provided by them is taxable under FCM, not RCM. FCM will come, RCM will not come. This is with respect to services provided by them. Okay. So direct selling agent, if it is other than body corporate, firm or LLP, taxable under RCM. If they are body corporate, firm or LLP, it is taxable under FCM. This is with respect to direct selling agent services. Then next. So this is about various agent services. Then we have legal services. See that, legal services. Legal services by an individual advocate or firm of advocate to business entity whose turnover during the previous year exceeds 20 lakhs or 10 lakhs. Concentrate. So legal services, we have some exemption related to legal services, that we need to understand. Okay, so now concentrate. So we are trying to understand now the exemptions with respect to legal services. So see that. So take page number, so we have one chart, legal service, advocate services, page number 108. Have a look into page number 108. Please see that. Individual advocate other than senior advocate or firm of advocates. So what is that we are discussing in this legal services? Advocate services and arbitrator services. Now we need to know certain basic aspects related to this. A person who is holding a law degree and registered with bar council. A person who is holding a law degree, please concentrate. A person holding law degree, a person holding law degree and registered with bar council so they can either practice as an advocate. A person holding law degree and registered with bar council, they can either practice as an advocate or can practice as an arbitrator. Can either practice as advocate or can practice as arbitrator. If they practice as advocate, they settle the dispute through the court of law. If they practice as advocate, they settle dispute through court of law, that is advocate. And if they practice as an arbitrator, then they can settle dispute out of the court. A person holding law degree and registered with bar council, either they can practice as an advocate or can practice as an arbitrator. If they practice as an advocate, they will settle the dispute through court of law. If they practice as an arbitrator, they will settle the dispute out of the court. They are permitted to do so. Now, when they practice as an advocate, again, they can be practicing as an individual. They can be practicing as a firm. They can practice as a body corporate also. But when an advocate is practicing, when an advocates are practicing as body corporate, they cannot provide representation services. So what is the meaning of representation services? Which means they cannot appear before the justice, they cannot appear before the judge. So that is the meaning of representation services. They cannot provide representation services, but can provide consulting services, consultancy services. They can provide consultancy services. This is when they practice as a body corporate. Then when advocate is practicing as a individual or firm, they can provide both representation services as well as consulting services. Now, if they practice as an individual, that is further divided into two. They can either be called as a senior advocate. They can either be called as a senior advocate. They can either be called as a senior advocate or normal, other than senior advocate. Who is a senior advocate? Other than senior advocate. Who will be called as a senior advocate? Will they get that status based on their experience? No. So that is a designation given by senior advocate, is a designation given by High Court or Supreme Court on the recommendations of Bar Council. Okay. So that is a designation. It is not based on their experience here. Designation given by designation given by High Court or Supreme Court based on recommendation by Bar Council. Based on recommendation by Bar Council, they will be given a designation, understood or not? So that is about senior advocate. This is actually the background. This is not there in the law, but this information we need to know to understand the legal services, okay? So now have a look into the exemption related to the legal services. Now each and every term you will understand. Individual advocate other than senior advocate and firm of advocates, we have some exemption. Exemption not applicable to advocate practicing as a body corporate. For advocate practicing as a body corporate, no exemption. So exemption not available to exemption not available to advocate practicing as body corporate, and it is always FCM. Then who will pay GST? That advocate who is practicing as a body corporate, which means a company of advocates. Mainly they provide consulting services, that is taxable, and it will be taxable under FCM. Whereas individual advocate other than senior advocate and firm of advocates, we have few exemptions. Then senior advocate and arbitrator, we have few exemptions. Now we will try to understand. There is an individual advocate other than senior advocate and firm of advocates who provided services to other than business entity, it is exempted. Who is other than business entity? An individual, that is exempted. Individual advocate other than senior advocate and firm of advocate provided services to a normal individual for personal purpose, that is other than business entity, therefore it is exempted. Now, no, it is not provided to other than business entity, it is provided to business entity. Then check next. Whether that individual advocate, whether that business entity is individual advocate or firm of advocates, means supplier is okay, recipient is another individual advocate or firm of advocate, yes. They are business entity, but the business entity is individual advocate or firm of advocate, therefore it is exempted. No. They are other than individual advocate or firm of advocate. Then who are they? Are they government, central government, state government, union territory, local authority or government authority? Yes, then it is exempted. No, then we need to check what is the aggregate turnover during the previous year. It does not exceed the threshold limit for registration, then it is exempted, otherwise it will be taxable. Wherever it is taxable, who will pay GST? GST is payable by recipient under RCM. This is in case of individual advocate other than senior advocate and firm of advocate. Same chart we have, even if senior advocate and arbitrator provide services, only difference is that when senior advocate and arbitrator provide the services, we need to check. If they provide services to another individual advocate or firm of advocate, we don't have any direct exemption. Even we need to treat them like a business entity. And if their turnover during the previous year does not exceed threshold limit, then it is exempted. Now, as such, you will not be able to understand this because it is too much technical and you need to go through that, and through illustrations only we can understand this. Now, added to this, one more point is also there, that is whether senior advocate services to another advocate or firm of advocate is exempted. Now, senior advocate is providing service to another individual advocate or firm of advocate. It is exempted if the turnover of that firm of advocate or senior advocate does not exceed the threshold limit. But here, whom should be seen as the ultimate recipient? We need to see the ultimate litigant or petitioner or applicant as the recipient, and accordingly the tax liability will be determined. What if there is no ultimate litigant or petitioner or applicant? In that case, so we need to check the recipient as individual advocate or firm of advocates only. Okay, so please see, for the purpose of RCM, litigant or applicant or petitioner shall be deemed to be recipient and they are liable to pay GST provided they are business entity other than central government, state government, union territory, local authority or government authority, and having aggregate turnover during previous year exceeding the threshold limit for registration. Now, you please go through this once. Meanwhile, I'll just take information to explain it to you. Okay, you please read it once. You please go through it once. These two charts and this explanation, we will take some illustrations to understand this concept. Okay, fine. I could not find it. I'll just write it. So we need to understand few questions. From there we get the concept. Okay, illustrations on advocate services. Advocate services. Now listen. First I am taking supplier. Who is the supplier? Then who is the recipient? Supplier, recipient, and then we need to know whether it is taxable or not. We need to know whether it is taxable or not. Then we need to know liability to pay GST. Liability to pay GST. That we need to know. That is, who is liable to pay GST. Now, first, supplier is individual advocate. Supplier is individual advocate. And the recipient is firm of advocates. Individual advocate other than senior. Other than senior. And the recipient is firm of advocates. Recipient is firm of advocates. Turnover during previous year. Turnover during previous year exceeds threshold limit. Exceeds threshold limit. See, I am just writing the questions. What you need to do, you just take one paper. You already gone through the chart. You just take a paper and you update these two. That is taxable, liability to pay GST. You just write in the paper. I will complete writing the questions and you try the answers. By the time I complete writing the questions, you should finish, and then I will explain. Then you check the answers so that it will be like a test for us. Okay, so I am writing the question. Look into the screen and take a pen and paper and you just write down the answer. That is whether it is taxable or not and who is liable to pay GST. That information alone you write. Then another question. Number 2. Supplier is firm of advocates. Supplier is firm of advocates and they are providing services to a normal individual. Individual, not individual advocate, a normal individual. Then number 3. Supplier is a senior advocate. Supplier is a senior advocate. They provided services to X Limited and turnover during previous year less than or equals to threshold limit. Less than or equals to threshold limit. Less than or equals to threshold limit. Then number 4. Supplier is firm of advocates. Supplier is firm of advocates and they provided services to senior advocate. They provided services to senior advocate and turnover during previous year. Turnover during previous year exceeds threshold limit. Exceeds threshold limit. This is number 4. I am assuming that you are all writing the answers. Then next. Next. So here supplier is individual advocate other than senior providing services to senior advocate. Individual advocate other than senior providing services to senior advocate. See, senior advocate will always be individual. A firm can never become senior advocate. Only an individual can become senior advocate. So, senior advocate, turnover during previous year does not exceed threshold. Then next, number 6, senior advocate providing services to individual, providing services to a normal individual. Okay. Then next, only 2 more here. Number 7, that is, listen, senior advocate providing services to individual advocate who in turn provided services to individual. Then number 8, senior advocate who provided services to firm of advocates who in turn provided services to ABC and Co. turnover during previous year exceed threshold limit. Now, for these 8 questions, let's see what is the answer. So, I am assuming that you have written some taxable yes or no and liability to pay GST. Who is liable to pay GST? Now, let's see this. Supplier is individual advocate other than senior, recipient is firm of advocates. Now, first, individual advocate other than senior advocate providing services to individual advocate or firm of advocate is outright fully exempted. Say this, individual advocate providing other than senior advocate providing services to another individual advocate or firm of advocate is fully exempted. It is fully exempted. There is no GST that is payable. Liability to pay GST shall not arise. No need to check the firm of advocate turnover during previous year. Then firm of advocates to individual. So, firm of advocates to individual. First one, senior other individual advocate other than senior advocate or firm of advocates to a business entity only is covered. Other than business entity is exempted. So, therefore, it is exempted. And liability to pay GST shall not arise. Senior advocate providing services to X Limited, turnover during the previous year does not exceed the threshold limit. So, when a senior advocate is providing services, beware, senior advocate is providing service to a business entity whose turnover during the previous year does not exceed the threshold limit, it is exempted. And liability to pay GST not applicable. Then, firm of advocates providing service to senior advocate. See, firm of advocate providing service to another individual advocate including senior advocate. Because in this place only individual advocate is given, but other than senior advocate is not mentioned. So firm of advocate providing services to individual advocate is fully exempted. So it is also exempted, and liability to pay GST not applicable. Then next, individual advocate other than senior advocate to senior advocate, simple, individual advocate other than senior advocate to another individual advocate or firm of advocate is exempted, and liability to pay GST not applicable. Individual advocate is senior advocate who is providing to an individual, that is exempted and not applicable. So you need to refer the second chart. When the supplier is senior advocate, you need to refer the second chart. So second chart that is provided to a person other than business entity is exempted. Then senior advocate providing services to individual advocate. Now we don't have that exemption fully. Please see. So like this we don't have in this place. So therefore another individual advocate or firm of advocate should also be treated like a business entity only. But who will be taken as the recipient? So the individual advocate or firm of advocate will not be taken as recipient, but in turn they provide services to one person, that person will become recipient. So in this case, who will become recipient? This individual only will become recipient. This individual only will become recipient for senior advocate services. This individual only will become recipient for senior advocate services. So for senior advocate services, who is the recipient? Individual is the recipient. So now whether it is taxable or exempted, senior advocate when provides services to an individual, it is anyhow exempted. So therefore the answer is exempted, and liability to pay GST not applicable. What about individual advocate services to individual? That is also anyhow exempted. Why? Because it is individual only, na. Then next we have senior advocate to firm of advocate. Now check who is the recipient. Are they in turn rendering services to another person? Yes, ABC and Co. Take that ABC and Co as recipient. Take that ABC and Co as recipient for senior advocate services. For senior advocate services, take that ABC and Co as recipient, and that ABC and Co turnover during the previous year exceeds the threshold limit. So then, when senior advocate is providing services to ABC and Co, turnover during the previous year exceeds the threshold limit, that is taxable. That is taxable, and who is liable to pay GST? ABC and Co is liable to pay GST. What about the services of firm of advocates to them? That is also same. It will be taxable, and ABC and Co will pay GST. Even firm of advocate services to them is also taxable, and liability to pay GST is on ABC and Co. Then few more questions, because still I am not happy with respect to whatever information that I have given. So because this is a concept which you should get registered in your mind, okay? So now look into the other area. Stages, recipient, okay? Supplier, recipient, whether a taxable, who is liable to pay GST. Now another areas I am just giving you. That is senior advocate. Senior advocate is providing services to. Senior advocate is providing services. Senior advocate is providing services to firm of advocates. To firm of advocates, and in turn firm of advocate is not providing services to any person. We don't have any information. And turnover of that firm of advocates, turnover during previous year does not exceed threshold. Now listen, in this case, firm of advocate in turn not providing services to any person, though this firm of advocate itself will be treated as recipient, and senior advocate is providing services to firm of advocate. Turnover during the previous year does not exceed threshold, therefore it is exempted, and liability to pay GST not applicable. Another case. Suppose if there is a business entity, that is arbitrator. Let's take another point. There is an arbitrator. That arbitrator is providing services to a business entity X Limited, and turnover during previous year exceed threshold. There is an arbitrator who is providing services to X Limited, turnover during previous year exceed threshold. Whether it will be taxable or exempted, business entity whose turnover during the previous year exceed threshold, therefore it will be taxable. And who will pay GST? X Limited shall pay GST. Then next example. Now, so next, there is an arbitrator who provided services to a senior advocate. And turnover during previous year exceed threshold. Then is it exempted? No, it is not exempted. It is taxable. And who is liable to pay GST? It is taxable. Liability to pay GST is on senior advocate. Last one, that is 12. There is a senior advocate who provided services to individual advocate, who in turn did not provide services to anyone, and turnover during previous year exceed threshold. Whether it will be taxable? Exactly, it is taxable. Then who is liable to pay GST? That individual advocate is liable to pay GST under RCM. So this is about this legal services. Okay. Then, so now one of our friend has asked me to explain fourth one. I am repeating again. Please see. Firm of advocate provided services to senior advocate. Firm of advocate providing services to senior advocate or any advocate, that is firm providing service to another individual advocate or firm of advocate, is always exempted. So therefore it is not applicable. Actually you will get confusion only in case where senior advocate is providing service to another individual advocate or firm of advocates. Okay. So now what is that you need to do? You need to take this chart. So it is a homework for today. You need to take that chart. Which chart? This chart, because it is a concept which takes time for you to understand, but you can definitely understand. It is not that difficult one. You can understand. Okay. So what you need to do, you need to take this chart, page number 108, and then keep this handwritten notes. Total 12 points I discussed. Okay. So full exhaustively everything I have incorporated into that. So go through these questions and you try to understand. You will definitely get. Okay. So just stick to that table. You will get it. It's not that difficult concept. Actually you can get it. So this is with respect to legal services that we have completed discussion. So legal services under RCM. Along with exemptions we have completed. So what is that? Refer page 108. Refer page number 108. Okay. Then next. And I will also be giving one assignment to you. I will also be giving one assignment to you today. That is, related to this RCM and exemptions. Related to RCM and exemptions. You will be having a question. You need to check whether there is any exemption or not, and accordingly you need to write whether it is covered under RCM or not. This is a homework for you because today we will be completing this RCM. So due to that reason, so in the Google Drive itself, it will be uploaded, that assignment will be uploaded. You can download it and you can just write the answer, keep it for your reference, and tomorrow I will give you the answers. So you can go through the answers at your end, okay? So you try that one. Now look into this. Arbitrator services and legal services we have completed. Refer page number 108. So arbitrator service and legal service we completed. Now D. Director services to company or body corporate. So there is a director. Which director? Other than executive director. Other than executive director. Why? Because executive director is an employee of the company, and employee receives any amount from the company, it is excluded from the supply. That's the reason. Other than executive director. Other than executive director means CEO or managing director or whole-time director, these people receive salary from the company and that is anyhow excluded from supply. So it is non-executive director who renders services to company or body corporate. They receive some money and on that they need to pay GST, not the director but the company has to pay GST. And we don't have any exemptions related to this. Then security service also we don't have any exemption. So please see this. Security services by any person other than body corporate to any registered person other than government, local authority or government agency. How to understand? First, if security agency is body corporate, the concept of RCM not applicable. So security agency should be other than body corporate. So if security agency supplier is body corporate, we will not get RCM, it will be FCM. Then suppose if the security agency supplier is other than body corporate, the recipient should be registered but not opting for composition scheme or not registered to deduct TDS. So in these two, suppose if the recipient is unregistered, FCM. If the recipient is registered but opting for composition scheme, then also FCM. If the recipient is registered but they are registered only to deduct TDS, then also it is FCM. Only in the last case it is RCM. So that is other than body corporate to recipient who is registered other than above, that is only RCM. So just if you go through this table, you will understand. So these are the services which are covered under RCM. Sir, CG, got, salads. So these are the only services under 9 subsection 3 notified for RCM. S for security lending, I for import of service, R for renting of motor vehicles, C for copyright service, G for GTA services, another G for government services to business entity, O for overseeing committee services to RBI, and T for transfer of right, that is TDR, FSI or long term lease. And then we have salads, S for sponsorship service where the recipient is body corporate or firm. Then A for agents, 5 agents are covered: insurance agent to insurance company, recovery agent to bank or financial institution or NBFC, then direct selling agent other than body corporate, firm or LLP to bank or NBFC, and then business facilitator to banking company, agent of business correspondent to business correspondent, that is A. Then L for legal services, that is advocate service, individual advocate or firm of advocate to business entity, wherever it is taxable it will come under RCM. And then arbitrator services to business entity, arbitrator service to business entity, that too. Then D for director services to company or body corporate, and last security agency services. Okay, so these are the various service that is covered under RCM. Along with this, we have also discussed the related exemptions. Okay, now we are having 2 more sections, that is 9.4 and 9.5. Once we complete this 9.4 and 9.5, with this section 9, liability to pay GST is over. And you know, this much time we took not only just to complete the notified services under RCM, but also exemptions connection also we completed here due to that reason. So now we are coming back to the square one. So section 9, liability to pay GST, we have 9.3, 9.4, 9.5. 9.3 we completed, okay. And as per this 9.3, who is liable to pay GST? As per 9.3, liability to pay GST is on recipient in case of notified services. Sir, CG got salads. Now, there is one exception to this. Have a look into this exception. Please look into chart in page number 16. For 9 subsection 3, there is one exception, that is transportation of goods by vessel from India to outside India or outside India to India. From outside India to India. Transportation of goods by vessel from outside India to India, where both supplier of service and recipient of service is located outside India. Liability to pay GST is on recipient of such service. Okay. So now this exception alone I will explain. Meanwhile, I'll give you a small 5-minute break. Whatever queries that you have, you can quickly post those queries. I'll have some water and come. Meanwhile, whatever queries that you have related to 9 subsection 3 notified service, because once I complete it, so that we can happily proceed to the next due to that reason. So whatever queries, but before asking query, think and ask. It is like, don't ask me to repeat. If you have doubt, you ask me, I can tell. Sir, once again explain 9 subsection 3, that is too much, not possible. So you ask me what are the doubts that you have related to this 9 subsection 3. Okay? Okay. Can you explain 12th point? Say this. Whenever senior advocate is providing services to individual advocate, now we need to check whether individual advocate is in turn rendering services to another person or not. If that individual advocate is in turn providing services to another person, then that another person will be taken as the recipient for senior advocate services. But here the recipient is only individual advocate. Now we need to check their turnover during the previous year. If their turnover, they should be treated like business entity only. And if their turnover during the previous year exceeds threshold, then it is taxable and they need to pay GST. Recipient is liable to pay GST. Then 7th one, senior advocate providing service to individual advocate. We should not take individual advocate as the recipient, because individual advocate in turn renders services to another person, so that person, ultimate person or end person should be taken as the recipient, and we need to analyze. So now senior advocate is providing services to individual, which is exempted. In the next example, senior advocate is providing services to the recipient. Who is the recipient here? Firm of advocate is not the recipient. They in turn provide service to another person. That end person should be taken as the recipient. That is ABC and Co. And therefore, in this case, services are provided by senior advocate to ABC and Co. whose turnover during the previous year exceed threshold limit. Therefore, it is taxable and that recipient will pay GST. That is this point. Then 11th one, arbitrator is providing services to a senior advocate whose turnover during the previous year exceeds threshold limit, and that will be taxable, because for arbitrator services provided to business entity exceeding the threshold during previous year is taxable. That is directly given in the chart. Okay. Then, sir, what if senior advocate providing service to firm of advocates? Senior advocate providing service to firm of advocates, aggregate turnover less than threshold, but ultimate recipient is X limited. Then we will take ultimate recipient as the X limited only. So whenever firm of advocate provides services to an ultimate recipient, don't take firm of advocates, take the ultimate recipient only. That ultimate recipient turnover during previous year does not exceed threshold. Exempted, exceed threshold will be taxable. The recipient itself will change whenever services are provided by senior advocate to another individual advocate or firm advocate who in turn renders services to another person. That ultimate recipient should be taken as the recipient. Then senior provides service to arbitrator is taxable. Senior advocate providing service to arbitrator if is taxable if arbitrator's turnover during previous year exceeds threshold limit. Then insurance agent to person carrying insurance business, that is simple. There is an insurance agent who is providing services to insurance company for its branch in urban area. Now they get a commission. That commission is taxable under RCM, so insurance company will pay. If insurance agent is providing services to rural area branch of the insurance company, they get a commission that is exempted. Then, sir, for individual advocate providing advocate services to senior advocate, should that senior advocate be treated as individual? That senior advocate will be treated as individual advocate. That senior advocate will not be treated as individual. That senior advocate will be treated as individual advocate. That's where in my explanation I told that senior advocate will always be an individual advocate only. Individual advocate only can become senior advocate, others cannot become senior advocate. Then next, sir, in example 11, okay, example 11, senior advocate being an individual denotes other than business entity. Then no, senior advocate is not individual. Senior advocate is individual advocate, business entity. Senior advocate is individual advocate, business entity. Okay, business entity, don't treat them as individual. Okay, because advocate is a profession. Any person engaged in profession is known as business entity due to that reason. Okay, so these are your doubts. Fine. Now we will move on to the next area, that is exception to section 9 subsection 3. Generally, in case of notified goods and services under 9 subsection 3, liability to pay GST is on recipient. But we have an exception. About that exception, I am just giving you some clarity. Please see. There is an exporter of goods. There is an exporter of goods who is located in Germany. There is an exporter of goods who is located in Germany, and importer of goods is located in India. Importer of goods is located in India, and exporter of goods is making sale of goods. Exporter of goods is making sale of goods to the importer, and this will be known as import. This will be known as import, and it will be chargeable to customs duty. It will be chargeable to customs duty. This is normal. It will be chargeable to customs duty. Okay. Now, in this case, that exporter of goods is supplier of goods. That exporter of goods is supplier of goods for this transaction, and importer of goods is recipient of goods. Importer of goods is recipient of goods. So for this transaction, sale of goods, supplier of goods is exporter and recipient of goods is importer. No change in this. Now, how the goods can be sent to India? So therefore, there is a shipping company. There is a shipping company. Where is this shipping company? This shipping company is located in Germany. This shipping company is located in Germany, and they are providing services, they are providing services to exporter of goods by way of transportation of goods, transportation service. Transportation service. What is the service that they provide? Transportation service. From where to where? From Germany to India. Transportation service from Germany to India. With respect to this transportation service, who is this supplier of service? Supplier of service is shipping company. So, in relation to this, the supplier of service is shipping company. Supplier of service is shipping company, and recipient of service is exporter of goods. So, supplier of service is shipping company, and recipient of service is exporter of goods. Supplier of service is shipping company, and recipient of service is exporter of goods. Both are outside India. But it is always taxable. This service is always taxable. This service is always taxable. Then who will pay GST? Liability to pay GST is on importer of such goods. Liability to pay GST to government is on importer of such goods. For this service, that importer of goods is not recipient. For this service, the recipient is outside India. Who is recipient? Exporter of goods. Importer of goods is not recipient for the service. So, for the service, importer of goods is not recipient of service. Even though he is not recipient of service, but he is liable to pay GST in this case. Okay. So, this is about that exception to section 9 subsection 3. Next. So, therefore, 9 subsection 3, that exception is in this place. This is exception. This is exception to 9 subsection 3 here. Exception to section 9 subsection 3. Generally 9 subsection 3, liability to pay GST is on recipient, but here it is on some other person. Okay. Now, there are few more questions here. Sir, in example 11, senior advocate being an individual, already explained that. Can you give one example to understand 9.3 exception? This is an example. Then difference between 8 and 9. Senior advocate is providing services to firm of advocate. The firm is in turn rendering services to another person. The firm of advocate is in turn rendering services to another person. So, that another person should be taken as the recipient. But in 9th case, the firm of advocate is not in turn rendering service to another person. So, the firm of advocate should be taken as recipient. That's the difference between point number 8 and point number 9. Then, in supply chapter case study, okay, that is not related to 9.3, so I am not answering that question. That's not related to 9.3. I asked you to ask questions related to 9.3. So, today after the class, you please post that question. I will reply to that. So, this is about 9.3 here. Then 9.4. Now, we are discussing section 9 subsection 4. Please concentrate. What is this section 9 subsection 4? That is, there is a person, see, there is a supplier who is unregistered and there is a recipient who is registered. First, for application of section 9.4, the supplier should be unregistered and the recipient should be registered, and that recipient should be notified, even the transaction should be notified, then 9(4) is applicable. Right now 9(4) is applicable only for one transaction, only one transaction. That one transaction is real estate transaction. That one transaction is real estate transaction. Purchases by registered person from unregistered persons. Purchases by registered person from unregistered persons. So that is the transaction here. Section 9 subsection 4. Purchases by a registered person from unregistered person by a real estate developer or a promoter. So please see what is covered under 9 subsection 4 right now. Inward supplies of a promoter or builder. So there is a promoter or builder who is registered. Now they are receiving inward supplies from unregistered person. Now they need to pay GST under RCM. And we need to check their inward supplies. Those inward supplies are divided into 3. See, please concentrate. This section 9 subsection 4 is a latest one, and this can be tested in exam possible, and so far it is not tested. So very important one. There is a promoter or a builder who is making inward supply from a unregistered person. Then he need to pay GST under RCM. Now we will break the inward supplies into 3. Inputs other than electricity, high speed diesel, motor spirit and natural gas. Because on electricity, high speed diesel, motor spirit and natural gas, there is no GST at all. That's why it is excluded. So inputs other than electricity, high speed diesel, motor spirit, natural gas, it is excluded. So other inputs. From where we purchased? We purchased from registered person. How much we purchased? Greater than or equal to 80% of the total purchases in a year. 80% of the total purchases in a year we purchased from a registered person. Now we don't have to pay any GST under RCM. But if there is cement, then we need to pay GST under RCM always on cement. So on the back of your mind, you remember one point on cement. Cement should always be purchased from a registered person. Cement should always be purchased from a registered person. If cement is purchased from an unregistered person, we need to pay GST at the rate of 28% under RCM. Cement should always be purchased from a registered person. Otherwise, the recipient, who is the recipient, promoter or builder, is liable to pay GST under RCM at the rate of 28%. So if you try to analyze it deeply, you will get to know that government wanted to collect the tax. So because the supplier is unregistered, they are collecting the tax from the recipient. Okay, that is the logic behind it. Then, so even if they have achieved 80%, see actually if they purchase 80% from a registered person, balance 20% they may buy from unregistered person, it is allowed, and they don't have to pay any GST under RCM. Again I am repeating, when they buy from an unregistered person, that supplier will not charge GST, they need to pay GST under RCM. But there is a relaxation that is given. How much is that relaxation? 20% relaxation is given. So therefore, they don't have to pay any GST under RCM with respect to that 20%. But if it is cement, always they need to pay GST under RCM even if they have achieved 80%. So therefore, what is the tax planning? We should always, that promoter or builder should always purchase cement from a registered person. Then next, suppose if the purchases from the registered person is less than 80%, inputs purchased from a registered person less than 80%, say for example 65% is purchased from registered person, then what is the balance purchased from unregistered person? 35%. What is the shortfall? 15% is the shortfall. So actually how much we should buy from registered person? 80. But how much we purchase from the registered person? Only 65. So what is the shortfall? 15. For achieving 80, what is the shortfall? 15. So now you pay GST under RCM to that extent. If it is cement, you need to pay GST at the rate of 28%. If it is any other goods, you need to pay GST at the rate of 18% applicable to such goods. Sir, even if the rate is 12, you need to pay 18%. Even if the rate is 5, you need to pay 18%. Clear? So in case of cement, pay GST at the rate of 28%. And in case of other goods, you need to pay GST at the rate of 18%. Now, if we have achieved this 80%, beyond 80, as usual, only if cement is there, you need to pay GST at the rate of 28. If it is some other goods, leave it, because already you achieved 80. When you pay GST under RCM, on 15%, means you have achieved 80. That's the meaning. So whenever you pay GST under RCM, that will also be added towards that 80%. Then, suppose if you are receiving input services, and these input services other than FSI, TDR and long-term lease, because FSI, TDR and long-term lease is covered already under 9 subsection 3. That's why other than FSI, TDR and long-term lease, if it is purchased from a registered person greater than or equals to 80%, GST not payable, because already you achieved 80%. If there is any shortfall up to 80%, then on the balance you need to pay GST at the rate of 18%. If you have already achieved 80, don't pay any GST under RCM. If it is capital goods also like cement, you should always buy it from a registered person. If you buy it from an unregistered person, you need to pay GST under RCM at the rate applicable to capital goods. So this is about inward supply of a promoter or builder. Sir, is this concept applicable for our exam? See, actually it is highly technical topic, and even if you skip it, not an issue. It is not an issue, but this concept is there. Okay, so let me check again once, because according to my knowledge it is there. Okay, see this, they have given this in the study material. You can see here 9 subsection 4. So they have given in study material 80% of the input services. So they gave it. So therefore it can be asked in exam. Okay, so therefore that's why I am discussing. So it is there, and I will explain here. I have not yet completed the topic. Till now, did I discuss any topic without giving example? No, I am giving example. So you don't have to remind me to tell an example for this. First I will complete this concept. I have not yet completed. I will complete it, and then I will be giving an example. Don't worry. Okay, wait. Please wait. So therefore, this is about 9 subsection 4. Inward supply of promoter or builder, which is covered under RCM. Okay, now look into this. This should be computed for each project separately, means it is not for all the projects together. Each project wise computed for each financial year. So this will be computed on a yearly basis or part of the year up to project completion. Inputs and input services should be considered together for computation, and capital goods should be considered separately. So inputs and input service to be considered together, and capital goods should be considered separately. Understood or not? So this is with respect to inward supply of a promoter or builder under RCM. Now you go through this chart. We will take some questions to analyze this. Okay, I will give you few illustrations and we will work out those illustrations as to how a question could be asked in exam. Okay, and even those illustrations I will share with you. Okay, say this. Illustration 1. A promoter, these are all like I developed some 3 illustrations, and these 3 illustrations I will discuss now and I will share with you, okay? I will share with you and you can go through at your end. So please concentrate. This is how they can ask a question in exam. So hope you have gone through the chart. Hope you have gone through the chart. What is it? Inward supplies of a promoter or builder divided into three: inputs, input services, capital goods. If inputs are purchased from a person, inputs other than TDR, FSI, inputs other than electricity, high-speed diesel oil, motor spirit and natural gas, purchased from a registered person, we achieved 80. So we need to pay GST on cement only at the rate of 28%. Suppose if there is any shortfall up to 80, that shortfall we need to pay GST under RCM at the rate of 18%. If it is cement, 28%. After achieving 80, anyhow if cement is there, we need to pay GST under RCM at 28%. Whereas input services other than TDR, FSI and long term lease, we achieved 80, leave it. We have means no need to pay any GST under RCM. We have not achieved 80, there is a shortfall. On the difference up to 80%, we need to pay GST at the rate of 18%. We achieved 80, then leave it. No need to pay any GST under RCM. Whereas if it is capital goods, you pay the GST on capital goods if purchased from an unregistered person at the rate applicable to capital goods. Not 18% or 28 at the rate applicable to capital goods. Now while doing computation, you take inputs and input services together because that 80% point is common for inputs and input service. So capital goods, we don't have that 80% point. So that needs to be taken separately. Now this is a question. A promoter has procured following goods and services for construction of a residential real estate project during a financial year. Name of the input goods and services: sand, cement, steel, bricks, flooring tiles, paints, architect or designing, CAD drawing, manpower supply service, aluminum windows, ply, commercial wood, concrete mixer, electricity, FSI, like this. Lot of goods are there. Now in these goods, we need to know what is the rate of GST. The rate of GST that is applicable on these goods, the rate of GST that is applicable on these goods is given in that column 5, 28, 12, like that. Then what is the value of inward supply is also given. Whether received from a registered person, yes or no, is also given. Okay, yes or no is also given. Now what is that we need to do? First, while doing the analysis, capital goods should be always taken separately. Now out of this, we have only one as capital goods. What is that? Concrete mixer. Concrete mixer is capital goods. You need to treat it separately. You need to treat it separately. Now this concrete mixer is purchased from an unregistered person. This concrete mixer is a capital good. It's a capital goods. It is purchased from an unregistered person. So we need to pay GST under RCM on capital good at the rate applicable to the capital goods, 12%. So it is always, no need to check 80 and all. So always, so as it is purchased from an unregistered person, so computation of GST payable under 9(4) by that promoter or builder. With respect to capital goods, 40 lakhs into 12%, 4,80,000. With respect to capital goods, 4 lakhs into 12%, 40 lakhs into 12%, 4,80,000. Always we need to pay the GST. No doubt about that. Now, this capital goods is over now. Don't take it into consideration. Don't take it into consideration now because it is already over. Treat it separately. Then, inputs excludes electricity, correct? But it is given. So we should not take it into account because inputs excludes electricity. Input services excludes FSI. So don't take it into consideration. Input services excludes FSI. Input excludes electricity. Input excludes. Then input services excludes FSI. So don't take it into consideration, leave it, electricity and FSI. Then you need to take the others. Is there anything else exclusion? No. Now others you take. All these are inputs and input services. Now what is the total? What is the total and how much is from the unregistered person? We need to analyze. Okay. So what is the total of this? We need to take. So what is the first step that we did? What is the first step that we did? First step, we identified capital goods and we checked whether it is purchased from a registered person or unregistered person. It is purchased from unregistered person. So we are paying GST on that capital goods at the rate applicable to the capital goods. So the GST payable will be under section 9 subsection 4 with respect to capital goods is 40 lakhs into 12%, that is 4,80,000. We are paying GST under RCM, no doubt. Second step, out of the remaining inputs and input services, take out the exclusions. What are excluded? For inputs, electricity, then diesel, petrol and natural gas is excluded, take out. And for input services, take out FSI, TDR and long-term lease. Now the remaining you take. In that remaining, you see what is the total. The total of that remaining. So 10 plus 15 plus 20 plus 15 plus 10 plus 5 plus 10 plus 20 plus 15 comes to 120 lakhs. This comes to 120 lakhs. This comes to 120 lakhs. Now take this 120 lakhs. Out of this, what is purchased from unregistered person? We will check. What is purchased from unregistered person? So this, only 2. So that is 15 lakhs and 10 lakhs is purchased from an unregistered person. So now 10 and 15 is 25. 10 and 15 is 25 out of 120. So 10 and 15 is 25 out of 120. So 20.833333% we purchased from unregistered person. So in that cement is there. In that cement is there. So first we purchased 20.833333% from unregistered person. Have we achieved the target? No, there is a shortfall. Actually 80 should have been purchased from registered person, 20 should be purchased from unregistered person, but we purchased 20.8333. In that cement is there. Always on cement you pay GST under RCM. Always on cement you pay GST under RCM under section 9 subsection 4 at the rate of 28%. So on cement you need to pay GST under RCM under section 9 subsection 4 at the rate of 28%. So you pay with respect to inputs and input services 15 lakhs into 28%. What is this 15 lakhs boss? Cement you pay at the rate of 28%. 4 lakh 20. Now you paid 9 lakhs. Now when you pay GST under RCM on cement, it will be added towards the 80%. So only now one is not purchased from a registered person, that is 10 lakhs. 10 upon 120. 10 upon 120 is less. Please see. Total value of inputs and input service during the financial year is 120 lakhs. Purchases from unregistered person is 25 lakhs. Percentage is 20.833. Excess beyond 20%, how much? 1 lakh, on which GST payable. Even though 80% is purchased from RP, but in the balance cement is purchased from URP. Therefore on cement GST is payable at 28% under RCM. So we are paying. Now what is the revised percentage of purchase from registered person except 10? So 110 we purchased from registered person. So therefore 91.67. So we achieved the target. We don't have to pay any GST. Sir, but we exceeded 80. It's okay. Cement is there. That's why. Cement is there. That's why we did this. So again I am explaining. Please listen. So we need to first check how much is purchased from unregistered person. That is In that we have cement. So always on cement we need to pay GST under RCM. Once we pay, now remaining you need to check. We already achieved 80, so leave it. Okay. So this is about this question. This is the difficult question. If they want to ask, they can frame a question like this. Suppose if they want to make a easy question, intermediate students. So the first question what I have discussed is a final standard. But at intermediate level that is too much, and just because I wanted to explain the concept I gave that question, but at intermediate level it will be of like this. Okay, please see. A promoter has procured following goods and services other than services by way of grant of development rights, long-term lease of land against upfront payment in the form of premium, salami, development charges, etc. or FSI, electricity, SP, diesel. Already they have excluded all these things. During a financial year, what is the percentage of inputs and input services received during the year? They gave the percentage. Whether received from a registered supplier or not, that is also given. This is the question. What is that we need to do? First, check how much is received from an unregistered person. So these two are received from unregistered person, that is 5 and 15. Exactly 20% is only from unregistered person, means balance 80 from registered person. Therefore, you don't have to pay any GST under RCM. So this standard you will get question in exam, don't worry. This is the standard in which you will get question in exam. Illustration 2 kind of, okay. So as purchases from URP is 20% of the total inputs and input service during the financial year, balance purchase from RP is 80% and no GST payable under RCM 9 subsection 4. So like this you are writing the answer for this. Then look into the illustration 3. A promoter has procured following goods and services other than services by way of grant of development rights, long-term lease of land against upfront payment in the form of premium, salami, development charge. So all these are excluded. Now, percentage of inputs and input services received during the year, whether procured from a registered person or not, is given. Now, first you need to check what are purchased from unregistered person. What are purchased from unregistered person you need to check. So this one 10%, this one 15%, and this one 15%, this one 10%. So total 15 and 15, 30 and 10 and 10, 20, 50% purchased from an unregistered person. How much? 50% purchased from an unregistered person. When 50% purchased from an unregistered person, they have not achieved how much shortfall? 30 shortfall, 30 shortfall, 30 shortfall. So with respect to that 30, they need to pay GST under RCM. But check whether cement is there. If cement is there, first you pay GST on that. Because even if you pay GST on anything else, and if still cement is purchased from unregistered person, we need to anyhow pay GST on cement. Even if we pay GST on anything else, but in the balance if cement is there, anyhow on cement we need to pay GST under RCM. So first pay GST on cement at the rate of 28%. Now what is the balance? 15. That 15 you pay on aluminum windows, so that you achieved the target. Please see. Purchases from URP 50% of the total inputs and input services. Shortfall 50, shortfall 30. First you pay GST under RCM on cement, whatever is the value into 28%, value not given in the question. GST payable under RCM on aluminum windows under section 9(4), value into 18. So the revised purchases from registered person is 80. How? This 15 and 15 and already we achieved 50. So 80%. So therefore on balance 20% purchases, on balance 20% purchases from, on balance 20% purchases from unregistered person, GST not payable under RCM. GST not payable under RCM. Is it clear? So therefore 3 illustrations I have explained related to this 9 subsection 4, and we completed 9 subsection 4 here. We completed 9 subsection 4. Actually this is only there in 9 subsection 4, nothing else. So if you read this half a page information, initially it will be difficult for you to understand. So this half a page information with those 3 illustrations will give you the clarity. Okay. Then 9 subsection 5, it will take little time. So that is related to e-commerce operator, that we will see in the next class. So what is the agenda of next class? That is tomorrow same time we will be discussing about 9 subsection 5, liability to pay GST under RCM for e-commerce operator with respect to notified services. Thereafter we have some circulars. These circulars I have converted into charts, that also I will share with you, and I will run through those charts so that you will get a clarity about these circulars. So once this circulars is over, with that we will be completing tomorrow, and along with the questions, then we started exemptions, so that exemptions we will be completing. So that's the target that we have. Okay. So that is the agenda for tomorrow. Tomorrow also from 7 a.m. to 11:30 a.m. And whatever doubts that you have on today's class and the previous classes, you can ask. With this, today's session is over. So now I am moving on to the doubt clarification. So now whatever doubts that you have related to today's session and previous session, you can ask. And there is one question Abarna has asked. In supply chapter case study question, Miss Srinidhi Kaushik, okay, how the third point is treated as supply. Varun is brother of Srinidhi Kaushik but not dependent. So that question, third one, Miss Srinidhi Kaushik received Vastu consultancy services from her business premises located in Bandra, Mumbai from her son. How you can read son as brother? Third point, son. Varun is son. How you can read it as brother? Brother, not brother, son. See this, son. Clearly I have given son. How you got brother, I don't know here, but actually it is son. So that's why it is supply under 7(1)(c). Then next, in section 9(3), importer of goods shall pay 2 tax and he can take ITC for both. Exactly. So they will be paying 2 taxes. They will be paying 2 taxes. That is customs duty they will pay, in that also IGST will be there. Again on the freight they will pay GST, that also they can take as ITC. Next, any other doubts? Any other doubts here? Sir, is luxury tax levied by local authority got subsumed into GST? See, luxury tax is levied by state government and that got subsumed into GST. I told you already that right now only entertainment tax is being levied by the local authorities and other taxes levied by local authorities are not there, that is actually levied by the state government. Okay. Then illustration 2, cement will be charged under RCM only. Illustration 2. That is illustration 3, I think. Illustration 3, I think, because in illustration 2, cement already we purchased from a registered person, so not a problem. So whenever we purchase cement from unregistered person only, then we need to pay GST under RCM. Sir, under section 9 subsection 4, only related to real estate. If individual purchases, that is not applicable. That is only for a promoter or a builder. 9 subsection 4 is now applicable only for a promoter or builder, not applicable to any other person. In the illustration example, even if Indian company pays the freight charges or German company pays the freight, recipient of the supply of transportation is always German company. No, not that way. Actually, they are rendering services to whom we need to check. If they render services to German company, then the recipient is outside India. If they render services to Indian company, then the recipient is in India. So then anyhow, recipient will pay GST. So here, who pay GST is not recipient. Who is liable to pay GST is only treated as recipient. So that's it. Fine. Thank you. We will meet in the next class, and whatever queries that you have, you can post it, and tomorrow morning also I will continue clarifying your doubts. Thank you.